Hey, trader friends, welcome to Trade Live with IG with myself. And look, Luke Mini Cooper is here. How are you?
I'm very well, thank you very much for having me. How are you?
I am very good indeed, except I didn't sleep very well after the overnight headlines. And then Wardy was messaging me last night as well. Yeah. Quite a bit of market reaction there when we saw these attacks, Israel's strike on Iran. If you're waking up to this right now, it's caused oil prices to surge, race to safe havens like gold as well, and futures now pointing to a very weak open for the European stocks that we are now keeping an eye on. What do you think of the situation?
Yeah, so with all US crude, as an example, we saw around 3:30 in the morning. So is it okay if you just bring up the price chart?
Yep, here we are.
We saw the price peaked at 3:30 in the morning. If you just go on the, you're on the daily.
Let's go on the hourly chart here.
Yeah.
There we are.
Yeah, so there you go. You see it up there, and it's come back off a little bit. Likely to be a very volatile day, as you said. Crypto's come off. Gold, clients are piling into safe haven assets such as gold. Index futures are off, and of course, oil has shot up.
Let's take a look at gold as well, because we saw such a big move. Let's just have a look at gold now, up more than 1% there, and it's really starting to get closer and closer to that psychological 3,500 level. Before we get to that, let's get to coming up. Let's bring that up, producer Phil. Right, do you want to take us through the coming up today?
Let's go. So overnight action, which is me and yourself. We've got the opening bell at 8 AM, and then we've got my manager Pete at 8:20. First time I've ever done it with Pete. So we're doing that for 15 minutes, and then we've got investing experiences at 8:35, and that's with yourself and Joachim.
Cool. Now, Elliot, I've been told, is not going to be able to make it, but we will be here to get you across the latest headlines. Speaking of which, one's just come across. This is reports that after the preemptive strikes that Israel launched on Iran, Jerusalem has declared special state of emergency. So it's a really tenuous situation. And all this, of course, coming after the Supreme Leader, Ayatollah Ali Khamenei, said that Israel will face severe punishment over its attack on the country. Right, good morning to all of you away from the numbers. Morning, team. Shrimp Fred also concurring with you. Yes, Bitcoin was lower. Not a preferred safe haven then, not when this is kicking off. Steve Davey saying good morning from sunny South Wales. It is sunny here too, but did you see the weather forecast? It's
warm, but it's not. It's overcast. It's overcast.
And expected rain.
But still, I can't complain given it was like 23, 24 yesterday, and it's expected to be similar temperatures today and the rest of the week, so it's not the end of the world.
Yeah, I can't complain either, given I do have a jacket behind me, but it's so warm at the moment that I can't put it on. Speaking of which, R Saxena Jugger saying new high for gold. We'll take a look at that in a moment. Andrew McKilvey also saying good morning all. Just gone long S&P 500. Have you seen the headlines, Andrew? Might want to be careful with your stops on that. And maturing to all in the Discord group, please feel free to put forward your trade suggestions and what's on your watch list in the appropriate channels. This is the Breakaway Discord group. Have you seen it yet?
Not yet, no.
It is, I think last time I checked, there were 18 members. Is that right? Is it 18? 23 now. Producer Phil is keeping an eye on it. Right, let's just whack up my chart here because I've made this specially for our trader friends. So geopolitical risk alert across the board today. Breaking news situation, if you've just woken up to this and you had an early night yesterday and missed all the excitement, airstrikes against Iran initiated, and no U.S. involvement confirmed, and missile drone retaliation expected. So this is the thing that can move it forward. Right, producer Phil, what did you say in my ear earlier? Let's go to overnight action, and we'll come back to this. Hello, hello. Welcome back to Overnight Action, where we get you across the headlines. So let's just take a look at some of the front pages this morning. CNBC first saying that we are going to see stocks pummeled in Europe. And also the fact that we are now awaiting comments on potentially a strike. What are you looking out for? Are clients calling in yet, Mini Cooper?
So, well, I came in early this morning to prepare. So I covered what reported last night and, of course, what's happening this morning. So I did a little bit of prep on that. So therefore, I wasn't on the lines this morning because as well, I usually send out the news. So as an example, on the LSE website, all the RNSs come out at 7 in the morning. So I'd send them out to clients before UK open at 8 o'clock so they are aware of what's happening if they do hold a particular stock or not. So usually I'm on the lines, I'd say around 7:40 on average, but of course not today because I'm here with you.
Yeah. Let's have a look now. If you come off that screen, I'm going to bring up my charts. So let's go escape. Producer Phil, it doesn't like, it likes to be stuck on F9, F11. Oh, once it goes on, Producer Phil is laughing at me because the F9 and 11 key is very sticky. Right. So some of the big things that are moving at the moment. We talked about oil earlier on. Let's just have a look at oil a bit closer because I have some technicals for you. Those of you trading the space, if you take a look at the daily chart here, you can see that we have cleared that line of resistance, which was last seen 1st of April. And this means now with that price action, as you can see the shadow there, which is peaking above the level seen 2nd of February. Maybe it's easier if I make a horizontal line for you there to see. This now means that if we have further news of hostilities and if we have more comments suggesting that a drone attack is close, then we are really pretty much, clear to head to highs last seen. And I'm going to draw that for you again because this is what technicians look out for. Last seen in January, mid-January there. So, that $80 a barrel mark is looking, supported now if we continue.
Looking likely, yeah.
Yeah.
And it seems like it's likely to continue because Iran has said they are going to retaliate strongly after their nuclear facilities were attacked.
And what's interesting is, after years and a long time really of Netanyahu talking about this move on Iran, I mean, this threat has been going on for many years, right? To the point where a lot of market watchers thought that this was a bluff. But now this has happened. Iran once called, I think, or ridiculed Netanyahu as the boy that cried wolf. And look at where we are right now. So the interesting thing is how this will progress.
I think it would be interesting to see how the US are going to respond because on your fact sheet there, it didn't say that the US have brought out a statement yet, right?
They've kept quiet about it so far, which has meant that Trump has had quite a few, comments suggesting that his promise of peace is now in tatters. Yeah. Let's have a look at another page for you. This is the Reuters.com page. Israel says Iran has launched 100 drones in retaliation. Now, you heard me talk about, this earlier on, and now Reuters has confirmed that Israel says Iran has launched 100 drones right now. The key thing is how long it's going to take to get there. So I watch this space.
Israel can stop them.
Yeah.
Yeah.
With their Iron Dome. So Israel has declared a state of emergency. Right. What else is on your radar?
Shall we talk about Boeing?
Yes.
Talk about Boeing is, of course, that was a very, very big story yesterday. So on our price chart, you would have seen it around 9:30, how you would have seen the Boeing shares plummeted. Later in the day, they did recover. Unfortunately, 242 people on board died with just one survivor.
I know that person will have some serious, what is it they call it? Survivor syndrome?
Survivor syndrome, is that it?
Have you heard of survivor syndrome?
No, it's crazy, but the probability of surviving that is minimal. And they're still searching for the black box now. And GE Aerospace, who basically help provide the engines for Boeing, have sent search parties over to try and retrieve it so they can learn a little bit more about what actually happened and how this was caused, because at the moment we still don't know.
Yeah, look at that reaction there, people. Also, just wanting to whack up, GE Aerospace as well, because we are going to be watching this. It's all sessions, of course. Did you see the reports as well that the one survivor, apparently jumped out of the exit?
Yeah, he jumped out because what happened is obviously the plane crashed into well, it went up, crashed into a building, and just explosions everywhere. Yeah.
And his I think everyone's talking about 11A right now, which is apparently the seat. Twitter friends, you might be able to tell me the seat he was sat in. 11A. Thank you, producer Phil. So my memory isn't that bad just yet. Right, let's move on to GameStop as well, because GameStop was an interesting one. Come off my chart there, because I'm gonna just whack up the headlines for you overnight. But GameStop, first quarter sales slumping.
Yeah.
Even as online gaming rose.
So the headline on that was shares plunged in the morning session after the company announced plans to offer $1.75 billion by selling convertible bonds to qualified institutional buyers. The stock is likely down due to concern about the dilutive effect of these bonds. Now, they say the proceeds would be used for general corporate purposes, including making investments in a manner consistent with GameStop's investment policy. And now, in March, GameStop were, of course, one of the companies who would pivot towards investing in Bitcoin as a treasury reserve asset.
Right, let's just take a look at the shares there, because...
So last month, GameStop bought 4,710 Bitcoins worth more than $500 million US.
Wow, that's a huge amount. But we're seeing this across the board now. Lots of companies just buying up Bitcoin, right?
Yeah.
Right, so this is the GameStop chart there for you. Also be watching this one on all sessions, because look at that.
Huge drop down.
Look at that move.
Huge drop down.
Down 11.7% there after a fall of 12% the previous session. Lots of big red candles there.
And I just wanted to point out the risk of slippage as well. So slippage is, let's say you set a stop loss, right? We can't always guarantee that when you set a normal stop loss is that you're closed out at that exact level, because the market may gap and the price may never trade there. So that is one thing to be aware of. Another example is oil at the moment with the volatility. You can get positive slippage or negative slippage, but we can't necessarily guarantee that you would be closed out at where you set your stop. So that's just one thing to bear in mind.
Is there any way you can make it more likely that your order will be filled? Is it easier just to call up one of you, just kind of say, look, I want to hit that stock and buy it at this point, but if it doesn't happen, can you
No, so it is easy to do it on the platform. We do offer something called a guaranteed stop loss, where it doesn't exist in the market. However, we do implement a policy where we put the stop a minimum distance away from the current level, of course, we do that when there's high levels of volatility, such as this with GameStop, because we're taking the risk. So we wouldn't put the stop really close, as an example, if a company was reporting literally half an hour before.
Yeah.
That wouldn't make any sense to do so.
Yeah. Now, lots of people chiming in. Monkey Man saying 11A sounds like emergency exit. Yeah, it was. Producer Phil says, yes, that stuck in my mind. Thinking next time I get on a flight, I'm going to choose that seat. Away from numbers saying best seat on the bus, away from fuel tanks and the wings, adjacent to the main entrance and the door. Away from numbers. Lots of knowledge there. I think, if I remember correctly, you have some sort of engineering background as well.
I've never even thought about this before getting onto the plane.
Yeah. There is actually websites where you can choose the safest. The least safe
But the planes,
the least safe is the front and right at the back.
you've got more probability of dying in a car crash than you do a plane crash. I always think I'm like really, really safe on a plane.
That is right, yeah. Statistically, you're still very safe on a plane. Andrew McKilvey saying smarter web up strongly. Let's have a look at that. Smarter web.
Back to Boeing quickly. There were numerous incidents in 2018 and 2019. That was with the 737 MAX. So that was in Indonesia and Ethiopia. So their reputation was
Already
of course, strongly impacted by that. But this has just reinforced it.
Yeah. Just illustrating what Mini Cooper was talking about just now. You know, Boeing has had so many incidents and negative ones in the past that this is just going to stop its recovery that was seen from the beginning of April until now. And you can see that this is a daily chart that you can see very clearly that reaction there, and look at the sell-off in the last few sessions. Right, Adobe. Let's have a look at Adobe.
Let's look at Adobe. So reported last night. So Adobe achieved a record revenue of $5.87 billion second quarter of fiscal year 2025. The projection was $5.8 billion US, and this represents 11% year-over-year average growth. Adobe's fiscal Q.
Do you use any of their products?
I remember using them in school, like Photoshop. That was when I was very young, though. However, now, no. What about yourself?
I do. The gallery does. There you have it. Lots of the gang, Cam and Terrence, they do, and James as well. But Adobe, I used to use Adobe Premiere. They've, as you said, Photoshop.
Yeah, I think that might have been when I was like year 6.
Yeah,
so
back in the day before everyone had smartphones.
Yeah, so I was like 10 or 11.
But looking at its earnings, back to the earnings, the fact that it seems to have put its concerns over image copyright and compliance and brand safety partly behind it, or it feels like it, because they had all these concerns surrounding Adobe Firefly prior to this, especially when they're investing heavily in AI and innovation.
Yeah.
And the fact that they've also raised their full year profit. You're liking all that mood music coming out from Adobe? Or do you think that perhaps...
I think with Adobe, they fell behind a bit on the AI front, particularly compared with, let's say, Apple, Microsoft. The results were fairly good, but then if you look on the daily price chart, you see how it shot up and then literally went slightly down from where it was.
Yeah, and
so it's... Yeah. I'm not as bullish on them personally.
Yeah. So from a candlestick perspective, trader friends, what this is telling us, the psychology behind candlesticks, is that there were lots and lots of participants that came in. They bought, and then the problem is they could not sustain the move higher, and the body of the candle is where most of the trading happened, as you can see there. And so the fact that it's moved lower is a suggestion, or ended there. It's a suggestion that we could see potentially more downside to come, particularly if we see another red candle today. Right, let's get a quick gold update before we go to a break. Right, here we are, gold, safe havens. Let's have that on my workspace, and let's have a look at the reaction for you, because this is the 1 minute chart, trader friends, and just looking at that, it is Friday the 13th today. It's not over yet. And have a look at that move. I mean, gold, thank you for the sound effects, people. Up 0.75% still there. You know, gold likely to continue moving higher, especially now that Iran has also said that it's going to retaliate. Gold hitting.
Strongly retaliate as well.
Yes. You know, we've got crude on the boil. We've got gold at highs. This is.
And we're going into the weekend.
Yeah, we are going the weekend as well. This is a story that could keep giving, right? Depending on what happens at the weekend over there. Bank of Israel reportedly already coming out and saying that they stand ready in areas of responsibility and using tools to support business continuity. This is according to Bloomberg, trader friends. Any of you trading this, please let us know on the comments page here, or indeed on the chat. Yeah.
Out of interest, what's that client sentiment on gold at the moment?
Let's have a look.
I can have a look on my side.
Yeah.
Gold.
Yeah, I hear poll coming up, people. Producer Phil is going to whack one up. Please, Producer Phil, no more, only time will tell.
So on gold, we have 69% long, so of course 31% short. And the last hour, it's been 51% buys. So between buys and sells, more or less even.
Yeah, interesting, right?
Yeah.
So it's going to be one of those. Some of the headlines that you should be looking at as well is that the reports now that Trump is going to make a G7 summit return in this Iran crisis. Another red sticky that's coming through is that we are now looking at the currency space. The dollar, let's have a look at the dollar, because we did see signs, big signs, the US dollar basket. Here we are. We did talk about the de-dollarization in the previous show, but dollar now at 0.5% higher actually, and we know that the dollar is a safe haven as well. So perhaps this is going to give the dollar some support going forward. Right, I know you've got a list of things for us. We've done Adobe.
Yeah.
What's up next on your?
Let's go with Oracle.
Right.
Oracle. So for those of you who don't know, Oracle is a global technology company who specialises in cloud solutions, database, and other related software services. So last night, their share price rocketed. Adjusted revenue of $15.9 billion was ahead of the projected 15.6. Earnings per share was $1.70 and surpassed the expected $1.64. And they have come out with an annual revenue forecast, and they expect very strong demand for its AI cloud services.
The thing that I like best about Oracle is that those of you trading this, have a look at where I've circled it there. Oracle has nice chains of strong buying. And as you can see here, especially since we got to that April low, we're still seeing more green candles than red ones. Just showing you from a technical perspective, I'm going to draw that to show you the upward trend, which is still clearly in place there, making sure not to pierce any of the shadows. And in the world of technical analysis, you know, one touch is not regarded as much, two is tentative, 3 is confirmation. And this looks like it could move higher from a technical viewpoint, at least according to this. Volumes were good as well, right? Volumes were good. And I'm going to try and oval that for you so you can see what I'm talking about, if I may. Oh, that's in the wrong place. It's really hard to do this on the go, but I'm going to give it my best shot. But this is what we like to see when there is either a great bit of buying, right, or a great bit of selling, because it means that there was volume confirms the move. I think very much on the Oracle side of things, the thing that was interesting was that the founder and CEO of Banyan Capital Management believes that AI-related stocks are what investors should consider for the long term. This is Ashana Sissel. Right. Good numbers today on the viewer number. So good to see all of you. Good morning, Davey. Good morning, Steve Davies and Eric Jones as well. Do hit the like and subscribe button.
How many subscribers do we have now?
Producer Phil, current number, current count. Have they put the like and subscribe logo on my face? 951. Come on, guys. Get us to 965 by the end of the show. Can we do that? Yeah, let's try. Let's try, people. Right. All right. We are going to go to a quick break, right, Producer Phil? But don't go away, because this is the best bit of the show. Guess the chart. Are you ready? Have you got your eyes on the chart? Because it's a UK stock, a reminder. And when we come back, the first person to guess the stock wins. If you don't get it, then Producer Phil wins. And we don't want that happening.
Definitely not.
Welcome back, everyone. Lots of guesses coming in. We've got Jim Paxman saying BP, possibly Pelican saying BP or Volex, maybe. But the winner is Theo Van Bartel, who beat Jim Paxman to it. It is BP. Theo, send me your address on ask@ig.com. Angela's a prize. Producer Phil says we don't have a prize. Angela's a prize. Yeah, send it over to ask@ig.com. I'll pick it up and get it across to you.
What's Phil's punishment for losing?
Yeah, Phil, what is, Trader Friends, tell us what is Phil's punishment for losing? That was a good one. I don't want to say anything because we often take a look at BP here.
Yeah.
So, whoa, here's the bag. Right, let's have a look at.
Let's see what's happening.
Yeah, let's quickly have a look at some of the overall markets, and it's risk off, isn't it, Mini Cooper? And then moving over to the watch list there, let's have a look at the Footsie first. And I'm going to zoom in to help both of us because our eyesights are terribly. Yeah, here we are. Have a look at that. EasyJet down 0.5% there. Informa. Sorry, down 5% there. Informa also down 3%. So EasyJet down 5%. Anglo American down 2% as well. Scottish
Mortgage Investment Trust down 2.13%. Antofagasta down 1.75%. We've got NatWest down 1.8%, and Barclays and Standard Chartered. Also, UK banks are also down. Barclays down 2.2%, and Standard Chartered down 1.88%.
Yeah, and HSBC also down 1.5% there. Let's have a look at the.
And we had Rolls-Royce there at the bottom, which was down 1.22%.
Yeah, but it has had a good run, hasn't it?
IAG's out now, down 6.86%.
Yeah, it's moving around all over the place, isn't it? Air France also down more than 5%. I hear producer Phil say, let's switch gears and move over to the winners list. Obviously, the losers list dominates this morning. So, Mini Cooper?
Yeah, so we've got BP up 3.13%, Shell up 3.05%, BAE Systems up 2.81%. Centrica up 0.68%, and Endeavour Mining up 1.5%.
I mean, this is just an incredible day. Seeing all the moves here, and I'm actually really surprised that we are not seeing bigger moves than that. The poll results are out, I'm being told. Let's bring it up onto the screen. Thoughts on gold? Bullish, 76%. Only time will tell. Interesting. 14% there. And bearish, 9%. Keeping an eye on Wizz Air, because Wizz Air is still on hold there, trader friends. Any of you, Andrew McKilvey, I know you keep a close eye on Wizz Air there. And likely to, when it opens, when we get that come through, it is likely to be one that will follow EasyJet lower, and also IAG we saw earlier. Also,
I'll be talking about IAG in fast markets later.
Let's have a look at.
Very excited for that.
Yeah, it's down more than 5% there. Let's have a look elsewhere on my watch list. Let's cross over to Germany now. And we are, let's just...
Like DAX this week, just Tuesday down, Wednesday down, Thursday down, and of course now down. In fact, on our website, Axel wrote a great article on it. For those of you who aren't aware, if you just type into Google or any other search engine, IG trading articles, you can see numerous articles from Chris, from Axel, which are really helpful, which do a little bit of stock analysis, but also technical analysis as well. So I definitely recommend having a look at that.
Yeah, and Axel's trade of the week was to long oil. So, yeah, good, done all right on that. Siemens Energy, do you want to read through the losers list there?
Would it be okay if you zoom in a little bit,
bit
more for me?
Let's go there.
Thank you very much.
Yeah.
So we've got, as you said, Siemens down just over 3%. We've got Porsche down 2.78%. Adidas down 2.48%. Deutsche Bank down 1.9%. We've got Mercedes-Benz down 2.07%, and Volkswagen down 1.95%.
Yeah, and really looking like overall the tech and the auto stocks there getting hit. Let's have a look at the very few
winners. Very few winners.
Yes.
Yeah, there were more winners in the Footsie 100 this morning than the DAX. Of course, we saw BP and Shell up. Of course, for the Footsie 100, I'd argue that's a good thing, given that from memory, BP and Shell I think those two are two of the top 5 constituents, and of course it's a market cap weighted index, therefore they have more of an impact on the price of the index.
Yeah. Let's get a quick reminder, if you bring us back on camera, producer Phil, some of the key headlines that are coming through at the moment. We've got huge reaction to the Israel-Iran conflict at the moment, but nothing concrete just yet from the Americans. Strangely quiet there, but the last that we heard, that we mentioned on the show, were the drones that have been sent.
The Americans must comment soon.
Yes.
At some point today, for sure.
Yes, and what we are seeing across the board here, we've just gone through the markets and the individual movers. I'm hearing producer Phil saying whiz is now whizzing.
Out of auction.
Out of auction. Here we are. Down almost 6% there. Going to put on the 1 minute chart to
That was
just...
similar to EasyJet and IAG as well, because they were down around 5-6% as well.
Yeah, look at that gap down. Woof. And it's not just that, but also, you know, across the rest of the travel space, you know, we are seeing some of the other big names as well. I think keep an eye on Carnival later on, but, you know, Air France, KLM down. We talked about IAG earlier. TUI, let's have a look at TUI, which is...
I remember seeing TUI yesterday. TUI was down a lot yesterday.
Yeah. TUI, here is the minute chart for you, trader friends, down more than 4% there. So big moves on the travel market. We're also seeing already some headlines from some of these airlines and travel companies saying that they are going to suspend flights to and from Tel Aviv, right? So every time this sort of thing happens, you know, it's going to be the travel companies that get hit. First, Thales, let's have a look at the defense space as well. Thales is up almost 1% there. Adding that to the workspace so you can see the reaction right now. This is the minute chart. It's coming off slightly now, but you saw that reaction at the close there. And the Dassault, I believe we have that on the system. Dassault system is the other one that's also moving lower at the moment, adding that to the workspace. This is the maker of the Rafale fighter jet. Some of the other comments coming through thick and fast. We've got China now coming in with comments on the conflict. China calls on relevant parties to act in ways conducive to regional peace and stability.
I believe Iran export a lot of oil to China, and within OPEC, after Saudi Arabia, Iran are the second largest producer, of course.
And interestingly, I've read somewhere that they put all the oil in tankers.
Oh, okay.
Yeah, so that they have the ability of, you know, getting it there. And if China doesn't need it yet, it can just kind of...
Oh, okay.
Yeah, wait or get sent back.
Yeah.
Let's have a look. We got a comment coming through from Eric Jones saying Marco Rubio, Secretary of State, released a statement hours ago. That is confirmed. Airbnb. David Boise, hello, good morning to you. Airbnb down 3% overnight. Yeah, so you're seeing all these travel and tourism stocks get hit.
Big user of Airbnb.
Are you?
Big fan of it, yeah.
I hate the business model. I do. I hate the business model because, you know, it works if you've got a house or a place that has no neighbors, nothing around it, right? On a mountain somewhere or out on a field. But then if you are Airbnb-ing someplace that is, you know, right in the middle of a, you know, apartment block or, you know, really...
Yeah, sounds really noisy.
Yeah. SWC continued to climb up another 16%. Wow, let's have a look at that. Not not familiar, yeah, just a reminder, you can't see Smarter Web on this platform because I believe it's only in the ISAs, correct? Yes. So that's where we are at this point in time. Let's have a look.
I can get up SWC on my DMA ticket. So it's at 175 at 190 at the moment, up 25%.
There we go. Mini Cooper. There you go.
Of course, if you did want to invest in that, you need to call in. You wouldn't be able to trade it on leverage on a CFD spread bet account. The reason being is we have a minimum market cap requirement, whether that be for UK stocks, US stocks. So therefore, for those smaller stocks which you actually want to invest in, where you own the underlying, we therefore only offer them on share dealing, and then SIP and ISAs, assuming they're eligible with HMRC, of course.
Right. Let's have a look at silver as well, because silver, which was riding higher in previous sessions, this is a daily chart now, we're seeing that it is coming off slightly, not by much, so it has to be said, but silver was going really sort of getting very hot recently. But interestingly enough, silver tends to lag gold. For those of you that trade this space, you know it's also more volatile. So keep an eye on that. The leg up might be coming slightly later. Right, so that's where we're at the moment for the markets. Let's move over to the FX space because, you know, a lot of this volatility is likely to also be seen across the Forex side of things. And we are already seeing the dollar, just whacking that up for you, start to really get well bid here after the events recently. Whacking that up onto a full screen for you. Outlook remains, you know, bearish overall, but the recent events between Israel and Iran might mean that this could change. But prior to this, the outlook was bearish, and we were looking at this, the dollar basket, staying below the 98.50 mark, but it may well start to edge higher. Other safe haven currencies as well, moving or tracking higher there. The yen, the Swissy, let's have a look at that. Here we are. So the yen and Swissy also both considered safe haven currencies, steady against the dollar after, you know, rallying around 0.5% each earlier in the session. But of course, this might all change now that we have seen, you know, safe haven assets like bonds, gold, well supported after Israel launched those strikes against Iran. Right, stay where you are. Go and get your cup of coffee, your toast. Monkey Man, if you're exercising, keep us on and stay exercising, because we are going to have Pete Ward up next. And don't forget to hit the like and subscribe button.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hello and welcome back to Trade Live with IG. I'm now standing in for Rich McDonald, so I have to put my best Scottish accent on and go, oh, it's Fergus, it's his long-lost brother. I'm here with Luke Cooper. How are we doing, Luke?
I'm very well, back from Portugal.
Excellent. You have a good time?
Very good. I was there Monday, well, this week it was Monday, Tuesday, Wednesday, and I was back on desk on Thursday and of course today.
Yeah.
It was amazing. Lovely weather, lovely food. In fact, I had the best burger of my life.
Excellent. Good to see you branching out there with your cuisine.
Very also had a good carbonara and good pizza and a bit of seafood rice.
Excellent. Yeah, got the dietary palate of an old 80-year-old.
Too right, too right.
Excellent. Right. Well, I think we're going to have a quick look now at the next section, which is fast markets.
Let's go.
So I think to kick us off, what are your thoughts recently on the moves in Rolls-Royce?
Right, let's go with Rolls-Royce. So since COVID, of course, Rolls-Royce has done exceptionally well. It's not really talked about that much, I believe, because it's not, it's not a US share. As an example, Nvidia, it's always in the news. Everyone's talking about the huge growth.
Yeah.
But since 5 years ago today, Rolls-Royce are now 692% higher.
Yeah.
than where they were. So it's an incredible move. And of course, if you did invest 5 years ago in a nicer account, then of course you're doing very well now.
Yeah. I mean, this thing was what? This was 80p, I think, the back end of December 2022.
Yeah.
I remember I had a good client of mine who was a decent old position in there. I think we rode it up to sort of £2.50. And I remember calling him up being like, what are your thoughts here? You've got it from 80. Like, when is the right time to start taking some out?
Yeah.
And I remember it was just like, well, the momentum of it was just starting to go, and it was a quality stock that probably should never have been at those prices. And yeah, to his credit, he held on for a bit longer, and I think
Which is very hard to do.
yeah, and I think he let some of the leverage stuff go, and then left a piece in the ISA, which is a nice way to do it. I think with the longer term stuff.
Yeah.
I mean, if ever there was an example of buy and hold, let the stock do what it's meant to do, let your investment grow. 80p to £8 in 2 years.
Not bad.
Take that.
Bank of America have got a 1,150 150p price target by this time next year.
Interesting.
So a fair bit higher than where it is now,
So
actually.
they're still calling it higher.
Yeah, yeah. I mean, NATO want Britain to spend 3.5% of GDP on defence, and of course, Rolls-Royce provide Royal Air Force with fighter jets and nuclear reactors, so of course they benefit from that.
That's it, yeah. And I guess, yeah, it's similar to the sort of BAE Systems and all those defensive plays that we've seen that have now got that kind of underlying bid from effectively, government spending. And, you know, in an ever increasing world of military conflicts, as we've seen, you know, overnight, these stocks continue to grow and grow. And okay, fine. And I guess, have you got any for me that you sort of?
Let's talk about JD Sports.
JD Sports.
JD
okay,
Sports.
fine.
Tell me about JD Sports.
Let me just bring up the chart there as well, so the viewers can have a look. 1 second. Let's have a look here. Okay, JD Sports. There we go. That's a workspace. Right, there we go. So where are we now? So 75 pence. Now let's just go a little bit further out. If we go to a daily, you can see how this stock has performed or underperformed. I mean, it's an interesting one. Like, I remember during COVID, JD was the company that when you could get back on the high street, people were queuing up outside to try and buy the latest pair of sneakers, right? But since last year, they've had basically profit warnings January 2024, November 24, and again early this year. And they are struggling with various different things. One, consumer spending. You know, people with less pound in the pocket to go and spend.
Of course.
I think 45% of their goods are Nike orientated, which we know has got its own knock-on effects and own issues and sort of lack of new products in the space. So, I mean, when you look at the chart and you go a little bit further out, we go to a weekly, you can see this was double the price. And I think it's interesting when you look at it like that and you think, right, well, risk reward, is there an opportunity here? Now, you know, with your safe hat on, you go, right, it's had 3 profit warnings, consumer spending's tightening, more people are maybe shopping online,
of
less
course.
footfall. But then if you look to try and make a bull case, you go, right, they've done a 200 store acceleration, so opened 200 new stores. They're exploring strategic opportunities in North America.
Very nice.
You look at what happened, I think it was a couple of weeks ago, Dick's Sporting Brand in the US bought Foot Locker for $24 a share, an 84% premium to their share price, which shows that, you know, there is appetite for M&A. And I think Citibank put something out on JD the other week, basically saying it could double. It's trading at 7 times earnings. It was trading at 14 times earnings. So in theory, it could be an opportunity for someone to take it private. Do a private buyout. So I don't know. It's either it goes back down to 60 and it tests, or it starts to move up higher again. It's definitely a kind of a risky one. But City did say that they thought it might potentially be something that's interesting at these prices.
And out of interest, what's our client sentiment on JD Sports at the moment?
Let's have a look, shall we? So up here, if you're not familiar with these wheels, you get the sort of idea of what we've been seeing on it. You can see here 96% of clients have long positions.
Nice.
And as we know, that is 96% of client accounts.
Correct.
It isn't a weighting.
Correct, because if it was a weighting, then it would be skewed, because if someone places a really large trade,
exactly right.
The data, and therefore.
So this doesn't show any sort of, you know, huge client side either buying or selling. It just shows you what's the position of the client sort of sphere at the moment, and that really is okay.
The best way to do it, really.
Which, you know, unsurprisingly, we're near the lows of April of 61p. We're off there a bit around 70, 74, 75. But I think it's one, you know, if you're going to trade it, smaller sizes, stops, and, you know, it might motor back through £1. It might get a bit of, you know, traction and start to turn the corner with these new stores, but it's probably a higher risk play, maybe one for your investment account. You know, ISA, etc. You could park a little bit up and not worry too much about the intraday swings, because we've seen it come up to 90, back down to 60, you know, on on a highly leveraged
which
basis, it's
sometimes
quite scary.
is the best thing to do when there's a lot of volatility.
Yeah.
Like you say, if you are trading on leverage, so on a CFD or spread bet account, it is always best, where possible, to try and use stops. And if you have like a certain stop level, don't keep moving it further and further away.
Yeah. Yeah, and let's see if we've got anything here on there.
That is a common thing we see clients do.
Okay.
And from Axel's trading workshops, which I help host, that is one of the key things which he really highlights, to actually have a stop level or a limit level and stick to it.
Yeah, exactly. A bit of risk management on the downside. So just here we've got tip ranks as well, which is useful to have a little look at and see what the sort of aggregated analyst price targets are showing. You see there 95.44 pence is the aggregated price target. 2 buys, 7 holds. So no one sort of screaming that they need to sell it and get out, and it's completely doomed. But with those profit warnings of last year, it is a riskier play, I guess, but with potential upside. I guess throw another one out to you. What about IAG?
IAG, of course.
You were talking about Wiz earlier with Angeline. What are your thoughts there?
Yeah, so what is IAG looking like at the moment?
Let me bring it up for you, one sec.
It opened around 5-6% down, similar to EasyJet and, of course, Wiz.
Okay, there we go. Wow. Yeah. Some move. So
big drop.
What, this time last year?
Yeah, so IAG.
60?
Yeah, so IAG in general, like Rolls-Royce, has done very well since COVID. Of course, they struggled in COVID. They've come back. They're not back to where they were pre-COVID, but they have done pretty well. And as of late, they've done pretty well. Recent results, which they announced, are very good, particularly for Q1. Typically with airlines, Q1, because it's after Christmas and of course people have less money.
Yeah.
People don't go away as much. And as well, interesting with IAG, we have seen an increase in demand in business class. Okay, now of course you could argue that's companies primarily paying for that.
Yeah, as business travel starts to kick in again.
But that is good for IAG, and of course IAG own BA, British Airways. And profit margins are greater on business class than they are on economy. Of course, they make a lot more money, so they've done pretty well out of that. Now,
business class on an IAG, what, 2, 3, 4 hour flight pretty much means you get about that much more of a seat, and no one sat next to you, so yeah, decent business.
And a bit of food and drink.
Bit of food, that's true. Yeah.
I've never been on business class.
One day, Mini Cooper. One day
I'll get that. Get some referrals through the door.
That's it.
with IAG, interesting, because I'd say a factor which really impacts it is the price of oil, of course.
Right.
Because of course, when you've got oil price rising, of course, planes use kerosene.
Yes.
Negative for airlines such as IAG,
True.
EasyJet.
True. But I do believe, they do hedge that sort of risk out. So they'll have things working in the background which will to sort of ensure business can continue even if there are geopolitical spikes, I suppose. But yeah, no, it's an interesting one. I mean, it's a stock that I've seen lots of client interest in. Now it is IAG, but there's still that old sort of domestic feeling. Oh, it's British Airways, really, just as another name. And people are looking at it going, right, yeah, people are flying more, people are taking more holidays again, and it's had a strong rise. But should we have a quick look at the tip ranks price targets there? I mean, still strong, isn't it?
Very strong, yeah.
And if we just drill a little bit further into here by clicking on View More, you get the full rundown here. So 368. We've been there quite recently, actually. So we're probably at the top end now of analyst expectation.
Yeah.
So I guess it's whether or not it can stick around here or take off further.
We'll see. I like that one.
Very good.
Right, so have you got any other stocks you want to talk about, particularly in the US? Or?
Yes. So basically, I did a little work on. We'll have a look at these. So Oklo in the States. You might have heard of it. You might not. So Oklo and NewScale Power have been the sort of poster boys of this week. If we look at that spike, it is huge. So $52 to 66
Yeah, big jump.
Big jumps, and basically there's this AI power revolution going on.
Yeah.
Where these companies which focus on small modular reactors, so nuclear power providers for AI technology. And these two companies both basically specialize in this. Now, Sam Altman, as we know, the CEO of OpenAI, he's backed Oklo. And that's one of the reasons for the jump up this week. It's got more credibility. But if we look at the weekly chart, we see the price rises. If you look at the axis, the y-axis here, it's gone from, under 1,000 to 6,500. So it's had
very big move.
566% in 12 months. And NuScale Power 445% in the same time period. Now, these are high-risk speculative plays.
Of course, yeah.
They are basically the nuclear power play behind the AI revolution, and it's either, the demand for AI is real, so the need for the power to boost these data centers, and they need it now. They're already working at, I think, 4 times the requested power need for the AI powering. And the technology is promising, but neither of these companies have got any revenue generation. Okay, and the crazy thing here with these valuations is combined, Oklo and NuScale Power together, they've got a $17 billion valuation, and they make no money. They burn money at a huge rate. So it is, just a producer Phil in my ear there saying, a bit like Rich. You're right. Unlike Rich's stocks, these ones go up. But the interesting one with this is they have got deals with the Department of Energy, a $900 million deal. They've got Air Force contracts. They have got full NRC approval for the SMR creations. Data centers use 4 times, they need 4 times the power they're currently getting by 2030.
Wow.
And so basically, Google last year in November, they came out saying they were looking at purchasing their own SMRs. So if nuclear power, because it's clean energy and it's carbon friendly, becomes the power solution for AI, the returns, this is the reason these are at these prices, because it's speculation on them being able to return this sort of revenue.
So you think in the long term, of course, it'd be a great hold. However, I'd say, of course, looking at the price chart, one thing to be wary of is huge volatility. Of course, lately from the price chart, we can see it spiked up, but the exact same thing could happen, but on the way down. That is one thing to note.
It's that plus, these are pre-revenue companies, so your downside risk is that their cost burn goes way too high. And is it something that you stick away and maybe in 10 years it's the trade of the decade? Everyone's looking for those next kind of unicorn stocks. We've seen it. On the show we've discussed different things, whether it's the AI stocks,
or like Palantir,
whether it's Palantir going from $15 to $150, whether everyone's always looking for the next Nvidia. On a smaller scale, we've seen the SWC stuff recently with Bitcoin Treasury, anything that's got that name, Bitcoin Treasury in France, Sweden, you've got H100 that's just open now. There's all these different things with little bits and sound bites, and you go, all of a sudden the masses go, right, that's the next thing, and they pivot to it. And it looks like this week, Oklo and NuScale have been the ones that have got that. Stocks to look out for. One thing I read earlier was basically, it's either the trade of the decade or it's complete science fiction. So I think, one for a small piece of investment, maybe for the ISA, and you look at it in 5 years' time. I don't think you want to be geared up on Oklo, hoping that it goes to 7,000 when it's at 6,500, and it could be 2,000 in the next day.
If you were, it's always best to try and use price alerts, because of course with these volatile stocks, they're always moving. And what you can do is you can just simply set a dealing alert.
Yeah,
And when
I can
the
show how to
price
do that
does
if you want.
reach a specified level,
Yeah.
then you get a ping, whether that be on your phone or your laptop, or you can even set it up to get an email, whatever you
So just for the viewers at home, just so if you're wondering how to do price alerts, just here at the top right, hit alert, stick it on price, and then you've got the option of price change or price level.
Yep.
I favour price level, so you can basically say, right, okay, this slinks back to 58.00, and let's say the sell price touches there. You can put a little message, reminder to have a look here.
Yeah.
You set that. That will occur once if the price gets there, which is useful. You could be out and about, you get a push alert to your phone, or you get an email, depending on how you set it up.
Yeah.
But the other one, which I quite like, is price change. I use these more on indices.
Yeah.
But you can use it on stocks as well. So you could say, right, okay, what's interesting to me is, I don't know, a 10% move in a 1 hour time frame. Okay, because these sorts of stocks are going to move 10% a day anyway, right?
Yeah.
So you want to know what's the big move, what's caused something to happen. So if you put it on a short time frame, 10% change in an hour, and you get that ping to your phone, or yesterday I was getting them on my Garmin, smartwatch, Apple Watch, whatever. You're out and about, you go, right, okay, that's it. Something must have happened, log in, have a look. Good tools that I'm not sure everyone knows about, but yeah, price changes, they are recurrent, so you only have to set it once.
Yeah.
And it will always notify you of those percentage changes.
Yeah.
Whereas the price level is, it goes once, it triggers, and that's it.
Yeah, and we have a lot of clients who I regularly speak to on the phone, on the lines, who regularly use these price alerts, because it's really hard to check the phone and be on the actual trading app or on your computer all the time. So it's really good just to get a notification, you're aware, and you know what's happening.
Okay, yeah, brilliant. Cool. All right, well, thank you very much, Luke. We enjoyed doing fast markets with you.
Likewise.
And I think Angeline will be back next with some more.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hello, trader friends. Welcome back. And we've got Joachim Planet with us from Panmure Liberum. You jinxed it. You jinxed it, Joachim.
Oh,
I spoke to you yesterday afternoon. You said it's looking a bit quiet. Well, it's been a meh week. And then what happened? What happened after that?
Yeah, no, I said it's been such a boring week. I don't even know what to talk about. And I suggested we should talk about the upcoming attack from Israel to Iran, just to prepare our viewers.
Was this caused by you? Was it?
Absolutely. I had inside knowledge. The Mossad has a direct line to me.
On that note, we've seen such an amazing amount of market reaction. Oil, as you saw earlier, gold as well, surging. Safe havens, we're seeing this run towards safe havens. But you have a special map to show us, I hear.
Well, I always love a good map, don't we all? But in essence, it's a map of the Iranian nuclear sites. And by now, this map is making the round in one form or another because the Nazan, sorry, what is it called again? Nuclear site, which is deep under a mountain. Natanz, not Nazan. Natanz. Nuclear site, it's the main Iranian facility to enrich uranium. That has also been the main target of the Israeli airstrikes. And there are two, I would say, important pieces of information that are relevant for me as an investor and for you guys as well. And that is, number one, the IAEA, the International Atomic Energy Agency, said that it was informed by Iran that there is no radioactivity at the Natanz site, which means that Israel most likely was not able to seriously damage, let alone destroy, the nuclear facility of Iran. That doesn't come as a surprise to me, because if you know a little bit about that, military experts say that in order to strike the Iranian nuclear facilities deep underground, you need two pieces of kit that the Israelis don't have, and only the Americans have. Number one, B-2 bombers. Which have enough payload that they can carry the heaviest conventional bombs there are, which are the massive ordnance penetrator bombs by the Americans, and the Israelis don't have that. And when Marco Rubio said that the US was not involved in that Israeli airstrike, it was clear to me that the Israeli had no chance whatsoever to destroy the Iranian nuclear facilities outside of using a nuclear bomb themselves. And let's all hope that we're not going there. So that means two things. First of all, Iran has been provoking a reaction, because if you scroll down on that thing, there's a chart underneath which shows the reported enriched uranium amounts in Iran. And you see how that has started to increase in 2025. It has started to grow at a faster level just when the US and Iran were holding talks again about limiting Iran's nuclear program. Those talks have stalled, and Israel felt it an opportune moment, obviously, to strike Iran and try to slow that down. Seems very much like it was not a success so far. And that leaves us now with, obviously, the question of what happens next.
Yes, so this is key, because all of our clients and our trader friends watching this at the moment might be thinking, oh, and Joachim, you know, I've got this long position. Andrew McKelvey, I know you've got a long position on S&P. I think I'm right in saying that. But you know, lots of people also here watching us have got, you know, positions in gold and oil. Some in the previous session shorted gold because, you know, gold has had such a huge rally, and perhaps we're in correction territory. And lo and behold, this happens overnight. So what should they be really looking at for key drivers to those investments?
So, number one, I've learned a new acronym last week, which is called BLUF, bottom line up front.
Oh.
And the bottom line up front is I don't think this is a time to buy on the dip in stock markets, but it's also not a time to panic. So that's a boring strategist answer, clearly. But
Like an economist now.
oh yeah, I'm both.
On
And
the
it's
one hand, but on the other.
yeah, that's like Lyndon B. Johnson said. He wants to have a one-armed economist because then he can't say on the one hand and then
there's
on
no
the other. But in short, normally I say whenever there is a geopolitical crisis unfolding, markets are selling, equity markets are selling off, hedge assets like oil, gold, etc. are rallying, and you should do the opposite. You should buy stocks and sell oil and gold. And I've actually on my Substack, which is free for everyone, I don't make any money out of it. I've got my armed conflict survival guide on it, which I reposted this morning, which kind of is the decision tree that I recommend going through. Now, if I go through these questions that you have in there.
Come back onto the screen.
The question is, how do I evaluate the situation right now? And it very much depends on the Iranian retaliation.
Yes, yes. And let's just read through some of the headlines coming through right now, thick and fast, as we speak, because I've got that open in front of me. We've got, the U.S. State Department saying that the indications there may be missiles, drones, or rockets flying over Jordanian space. Thank you, Waka Waka, for pointing that out earlier. I mean, is the drone thing the thing to look at, or is there something else at play here that is way more important that might decide the direction of this conflict?
Yes, so the Israeli Defense Forces say they have noticed 100 drones coming in their direction. That will take several hours to arrive in Israel, and it's not about the drones at all. It quite frankly, the most likely explanation in my view is that those drones are there to weaken the Iron Dome air defense shield of Israel, so that once the drones have been shot down, you can launch the missiles from Iran with a higher chance of breaking through that, because the Israelis might have just exhausted some of their air defense capabilities. In the end, we are still in a situation where Iran is striking against Israel, and that's crucial because the situation is really getting out of hand the moment the US gets involved. So at the moment, and that's a really important piece, when the Americans said we were not involved, it reduced the likelihood that the Iranians will strike US military bases in the Middle East. And that means that it will, at this point in time, not lead to a persistently high oil or gas price. However, what we have to observe in the next couple of days and weeks is whether Iran will attack Israel so forcefully and so persistently that it forces the US to take sides and actively help Israel. In which case, we are in this situation where Iran might attack oil fields and US military bases in Iraq, Saudi Arabia, and anywhere near Iran itself. And that is at the moment the worst case scenario, because that would mean oil prices, gas prices spike even more and stay higher for longer.
Let's just check on oil prices right now. This is WTI that I'm putting up for you. This is the daily chart, but let's move it to the hourly so you get a good idea of the moves that we've seen recently. It's coming off slightly now, but this is the hourly chart here, but we are still up 5.5% there. The likelihood, looking at the daily chart, as I mentioned earlier, we've really punched through, levels of resistance. And now it looks like we are starting to edge towards highs seen earlier in the year in January. That almost $80 a barrel. Potentially, if things get far worse there, we could easily start climbing back up to that territory. How about, tourism and travel? We saw all that starting to wilt already this morning. Yep. So Wizz Air Abu Dhabi already being required to cancel some flights today, scheduled to fly over areas affected by those tensions. This is according to a statement. And also, we saw the two E's. The EasyJet, let's see, I haven't checked Ryanair actually, but like the others, I expect it to also be lower. Yes, there we are, down more than 3% there. Interestingly enough, let's see if it's turned. Thales, yes, it has turned slightly, is now up 0.5% there. This is the minute chart there. But why is it there hasn't been a bigger move on defense stocks? Is it because a lot of this has been, we've seen that big rally earlier on in the year?
So when it comes to the airlines, that's clearly a reaction to higher oil prices. And higher oil prices mean higher costs for the airlines, but airlines like EasyJet, Ryanair, etc. are not that affected because they don't fly long haul to Asia. Because the biggest disruption that we have now is long haul flights between Europe and Asia, because for the last 3 years they weren't able to fly over Russia to begin with, except Chinese airlines, and now they're not able to fly over Iran, which means they have to make an even bigger detour, and that costs even more money. So that's a problem for the long-haul carriers, and the EasyJets, Ryanairs of this world are not that much affected by
The bigger carriers are, so like the Air France,
Lufthansa, those guys.
Suspended flights to and from Tel Aviv until the notice, the IAGs, which is also moving lower. We are down 4.5%. Look at that drop.
Exactly. On the defense stock side, it should support defense stocks indirectly, but it isn't really that relevant because both Iran and Israel have their own defense industry. They don't need to go to Rheinmetall or other companies to really buy tanks and stuff like that because they built their own. So for them, it's kind of a noise, if anything. It is going to be much more interesting to see what happens now that we're probably going to be back. Our energy analyst and commodity analyst in our firm told me this morning that he expects oil prices now to be in the $70 and above range in the foreseeable future. We're still a long way away from $100 or stuff like that, but we're definitely going to be in the 70 to 80 range. And what that means is also that we will get more inflation pressure everywhere, in the US, in the UK, and in Europe. And that comes at the time when the Americans are already fearing inflation pressures from the tariffs. So I would say that it is particularly critical for the S&P 500 now. And the question there is, given that the S&P 500 has bounced back so significantly since April, is it time to take some profits there? And again, bluff, I would say it is time to curb some positions in the S&P 500 because our own sentiment indicators a week ago indicated that the S&P 500 was about 15% above the macroeconomically and fundamentally justified levels. So there's a lot of opportunity now for investors to take profits in the S&P 500.
Andrew McKelvey, you listening? Because I know you've got a position on the S&P 500. Let's talk about some upcoming dates as well, because I believe it's this Sunday when US and Iranian officials were due to talk in Amman for a 6th round of discussions on Tehran's uranium enrichment program.
And the emphasis in that sentence is, we're due to talk.
Yes, we're due. No prizes for guessing.
Whether that is going to happen, we'll find out.
Happening. But after the action overnight. The other key thing, of course, is next week we've got the Fed. We've also got Bank of England, and perhaps we could get more clarity ahead on the path of interest rates. Of course, as you rightly mentioned, all this means when you see oil prices jump, that reaction to Iran, Israel, mean higher inflation for everyone. So this is going to make things a lot trickier for central bank heads and JP as well, right? Who's so far looked really good, saying he's going to hold back and wait for data to come through.
Yes, and he has now an even bigger reason to hold back and not do anything right now. Because on the one hand, we were quite surprised by the low inflation numbers that came in this week, both on the consumer price and on the producer price side, together with the strong non-farm payrolls last Friday. And last Friday I was here and I said I would be surprised if non-farm payrolls surprised to the upside because of weaker ADP numbers a couple of days earlier. How wrong I was.
Yes, and how pleased I was, because I said, and this was on air, trader friends, I think there was only one person out of you that got it closer than I did. But I said it was going to be pretty darn close to expectation. And Rich wrote me and said, on air, roasted me on air and said that the one thing you can count on is it's never close to the actual expectation. What happened, trader friends? We found out, didn't we? We found out. This coming week is going to be exceptionally exciting too, because you know, we've got these inflation reports. I know they don't capture what's happening right now, but do you feel that in the coming months, you know, we've already seen lots of red flags, lots of analysts warning that never mind what happened overnight, but the tariffs, we're going to see the effect on prices of that filtering in the coming months.
Absolutely, it's already starting. So on my blog, sorry.
Shameless plug.
Shameless plug. But then again, you know, as I said, it's free for everyone, so I don't even make a single cent out of it. But on Wednesday, I wrote about a study where some scientists and economists tracked online retailers, 2 anonymous US online retailers. Now, who could that be? In any case, they looked at how they changed prices online after major tariff events. Whether it was tariffs against Canada, Mexico, or China, and what happened afterwards. Long story short, on the day after tariffs were announced, they hiked their prices, and when the tariffs were paused or reduced, they didn't lower them. Why would you?
Yes.
So we already see that in the online retail space, price inflation has accelerated, and now it's just a matter of waiting until that comes through in other areas of the economy.
It's just like the announcement of you know, the euro. Most people go, oh, that's such a great idea, all unity and everything. Most analysts and market watchers and economists all went to the same thing. Everyone on the trading floor. Everything's going to become much more expensive.
Yep.
Right, and on that note, stay with us because we've got all sessions coming up next, and then we have Issar coming on with me to talk about all the key events that are coming up next week that you can trade on. Thank you so much, Joachim, for coming in. Looking forward to welcoming you back again after your travels. He's going to be away for a bit, but loving the maps. Thank you for bringing that in for me. You know how much I love maps.
Excellent.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back to All Sessions with me, and we are off to the races. Let's have the bell, people. Right, here we are. Right, what an amazing day. Taking a look at the watch list right now, because it is shaking out, especially after the events overnight between Israel and Iran. Iran's military now saying and confirming the large-scale strike against the air defense array of Iran has taken place, and Israeli media now saying military says no need for citizens to remain near protected areas. Let's have a look at what's it looking like and shaking out on the All Sessions. Oxygen, All Sessions down 8% there. Some of the quantum names, IonQ down quite a bit as well, down almost 4%. And we've got the consumer names, which have not done too well this week, it has to be said. Your Affirm, your Hims and Hers, also down strongly there. Case in point, in terms of airlines, we spoke about this with Joachim. We are seeing this herd-like mentality, so a lot of the airline stocks sagging, but it's really the ones that will be impacted by long haul. So across Europe, it was the IAGs, the Air France, and the Lufthansa's. But across the All Sessions, we've got Delta Airlines down more than 3% there, and United also down more than 3% there. Tesla Motors down 2.5% there as well. Monkey Man, did you short Tesla? Because I have a feeling you shorted Tesla recently. And Airbnb, lots of controversy here over Airbnb. Some of us like it, some of us hate it. I hate the whole concept because I think it destroys communities. It's down more than 2% there. Let's have a look at the winners board to see how that is shaking out. And we have Oxy, one of the stocks that SR is really keen on. Occidental Petroleum is up there 5%. We've got Beyond Meat as well. Very rare for Beyond Meat recently. It's up almost 4%, and also the oil majors, no surprise there, given the reaction on oil. ExxonMobil and Chevron also up there on the leaders board. GameStop, we talked about that earlier on after its outlook and earnings. Outlook, I think, was the thing that pushed it, and it's now moving 1.5% higher. Just taking you through some of the chat earlier today. Monkey Man saying sold Hims last week. Well done you, Monkey Man, ahead of the pain that Hims has been seeing so far this week, the weakness there. And Steve Davies chiming in saying, I've done quite well on quantum computing recently. Very volatile. That's right. For those of you that trade this space, it is highly volatile. So make sure you've got your stops and limits in place because quite often it can move against you very, very quickly. Just showing you some of the big names in the space because it is a down arrow day at the moment for quantum computing. Rigetti down 3%. IonQ also down almost 4% now. And D-Wave Quantum down almost 5% there. Quantum computing, Steve Davis, if you have shorted this, is down more than 2% there. Now, Steve also saying, I just got into the NASDAQ. Let's have a look at the NASDAQ for you. US Tech 100, as it is called on the IG platform here. And we are seeing, putting on the moving averages, just to have a quick look. I like the moving averages because, especially when something has happened overnight, you just want to have a quick snapshot, right, of whether it's changed the sentiment. Currently, the Tech 100, Steve Davies, still above the 50, the 20, and the 100 moving day average, but it is starting to tip and has, if you look at the shadow there, it has crossed the 20-day moving average there. So bear in mind, volumes are not peaking at the moment, but just keep an eye on that because we could see potentially this move lower if the hostilities start to really jangle investors' nerves. You heard Joachim say earlier there, his acronym BLUFF, and his humble opinion is that if you are looking to take profits now might be the time to do it, right? Getting you across some of the other headlines as I switch across to having a look at the DAX as well as the Footsie. The Footsie is down 0.4% there at the moment, and having a look at the DAX as well, which has been doing well recently, otherwise known as the Germany 40 on the IG platform. But there you have it. This is the daily chart, and we are seeing a bit of a hammer, inverted hammer formation there. It's a good one to keep an eye out on that. Having a look at the minute chart to show you, or 5 minutes really, to show you the reaction there. And this is the 5-minute chart. Having a look at maybe the hourly, that might give you a better view of the move. But the DAX currently still showing resilience, and in terms of overall, it is down 1%, but it has come from a place of strength if you look at the daily chart there. But those red candles that you're seeing, that 1, 2, 3, 4, 5, 6, so quite a few red candles there. This is yet again another signal for those of you, if you are long on this, then make sure you are aware of the situation in the Middle East. Let's have a quick check on oil as well, because we had Axel talking about trade of the week on oil. As I said earlier, if we see further closes above that 74 level, or breaching that 74 level, then we could see this price action march towards that $80 a barrel, quite soon, depending on what happens on the ground. We have some headlines coming through now on the alert system here that I've set up, and the Iran Atomic Energy Organization says Israel's attack is a failure for the IAEA as a result of its director's shortcomings. Keep an eye on also what happens with the Iron Dome, because you heard it here first. Joachim and I discussing, the fact that it's not so much the drones, but literally what the drones could potentially do to weaken the Iron Dome. And of course, what the Americans say later on in the day could also be pivotal for price action. Right, producer Phil, is Issa waiting in the wings for us? Right, we are going to go for a short break whilst we get Issa on here. Any questions, please slam it here on the chat next to me, and slam the like and subscribe button, because give us a like to get your mum, your dad, your hamster, your pet dog to also slam the like button and the thumbs up, because this just means we get to bring all this great content to you forever in your homes, in the comfort of your homes. You don't have to board that tube. You can be watching this in your pajamas. That's a scary thought, Phil. I now have this image of you in pajamas and Monkey Man and Steve Davis in pajamas. Right, we'll be right back. So stay where you are. Put those questions in the chat and we will get them done in the week ahead.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome back, trader friends. It is Itar.
Hello.
Here to tell us about the key risk events and tradable events next week. And boy, it's Friday the 13th. We're not even halfway through.
Yeah, and there's already a lot of news.
Here we were hoping for an easy Friday into the weekend.
It's just kind of nuts. I think every time the market feels much calmer, there's always just a random event, like whether it's the Israel-Iran stuff that happened recently or whether it's any of the tariff drama that happened previously, that kind of causes a bit of a spike in volatility. And so I think it's just one to watch out for. So I think next week is a week that is relatively low on earnings news. We're kind of through basically all of the earnings at this point. But it is a big week for kind of global news and for macro. So we have the kind of ongoing Iran and Israel tensions that we should talk about. We have some stuff on US macro. So in particular, we've got the FOMC decision. And as part of that FOMC decision, like they do every quarter, they're going to provide the summary of economic projections. And I think that will be the news generating event rather than the actual rate decision itself. In the UK, we've got CPI on Wednesday, and then we've got the Bank of England rate decision on Thursday. That rate decision is not one that's super certain, and so we should talk about whether we think they're likely to cut or not. And then you've got Japan. Japan has a rate decision on Tuesday, and then the CPI data comes out on Friday, although there's always a kind of rumor that they know what the CPI data is going to look like when they make the rate decision. And Japan is also one where there's not 100% certainty on what the outcome is going to be. People expect it to be unchanged.
Yeah, I think they're going to hold. They've been making a lot of cautious sounds, right?
So actually, yeah, maybe let's start with Japan, right? So Japan is obviously an economy that had historically had very low inflation, even deflation, and they had these like rocket low interest rates. But the last 2 or 3 years have seen a lot of that regime kind of turned on its head. And in particular, over the last couple of months, we've been seeing somewhat hotter inflation data coming out of Japan and hot jobs data, and that is generating a lot of uncertainty around what the Japanese kind of rate prospects are going to be like. We've also seen shifts in government bond yields, we've seen pressure on the Japanese yen, and so there is a general view that Japan has to be more hawkish to kind of combat some of the exchange rate.
Yeah, many economists even saying they're behind the curve now.
Well, they do feel like they're a little bit behind the curve. So rates in Japan are 0.5%, 50 basis points, still very, very low. And while the other countries we're going to talk about, the US and the UK, are looking to cut, Japan is, if anything, looking to hold or increase. So it's in a very different kind of regime to where some of these other countries are. I agree with you. I think the decision next week is going to be pretty clearly that they're going to hold. But everyone will be watching for how hawkish the language will be to kind of signal what's coming in the future, in particular as some of those Japanese government bond yields go up and the Japanese central bank has had to do some bond buying to kind of support the yield curve control.
Yeah. So let's go on to the Fed and the Bank of England. Which one should we do first?
Should we just work our way from the bottom?
Yeah, why not?
Yeah,
Let's
cool.
mix it up a bit.
Yeah, exactly. So, okay, UK is in a bit of a weird position at the moment. So we've just had the spending review. The spending review was actually more positive on government spending than I think a lot of people had assumed it would be. So we know that for a few areas of the budget, there were going to be major investments. So we knew, for example, in capital expenditure, there was likely to be more investment, in part because the government had signaled that their fiscal rules would apply differently to capital spend versus current spend. We know that for defense, there has been a lot of pressure to spend more, especially after the kind of strategic defense review that had just happened, in particular with the push to try and signal when we'll get to 3% of GDP. And then I think one or two other areas around, for example, like infrastructure and energy, those were areas that we knew there would be major government spending. What has been quite surprising is that there were a few areas where we thought there would be lots of spending pressure. So we knew there was going to be pressure on the NHS, we knew there was going to be pressure on schools, we knew there was going to be pressure on, for example, areas like policing. And actually what we found is that the spending review has revealed that in those three areas, there will always be real-term increases from this parliament. And they're gonna basically pay for those real terms increases through cuts in things like asylum spend, in particular on hotels, and on a number of other kind of smaller areas around the government spending. And so essentially it was a much more bullish spending review than I think people had expected. And I think with that in mind, UK inflation has been coming down. I think the question will be, will the Bank of England cut? And my gut feeling is they probably will. Markets are kind of 60-40, so there's a 60% chance roughly that they will cut, but there's still a decent probability that they'll hold and signal a cut kind of in the relatively near term.
Yeah. My gut feel is they'll cut as well.
I think they'll cut, yeah.
Just because data's not been great, you know, we've seen, you know, U-turns.
Jobs data wasn't the strongest.
Jobs data wasn't the strongest. We're starting to see cracks within the smaller businesses and the hiring on that side of things.
Yeah, Europe is also cutting. So I think in that context, I'm kind of where you are. But I think it's not the clearest decision, and I think it'll be an interesting one to see what the language is that they share as part of like the press release, for example. And I think if we think about where the Bank of England is relative to the US, there is less concern about inflation from things like tariffs. At the same time, there is a bit of concern around kind of some of the economic weakness. That being said, the Bank of England's mandate is a single mandate. It's not a dual mandate like the Fed's. And so they are going to have to be data dependent. And so what I think is going to happen is we'll see the CPI data on Wednesday. And if the CPI data is in line or cool, I think we'll get a cut. If the CPI data is hot,
then we'll get a stay, get a pause.
We might get a stay, yeah. So I think it's a watch for Wednesday to see what will happen on Thursday.
And of course, the clear number one party in town is that Fed meeting, right? And it's going to be even more interesting after what happened overnight.
Yeah.
Because, you know, the mood music would have changed, and, you know, with oil surging, I mean, that move was just, you know, it's now up over 6%, but it was up higher. That's all going to lead into higher inflation, right?
For sure. And I think this is a rate decision where there's almost no uncertainty. I don't know if you can pull up the Fed Watch tool, but essentially, I think it's something like 97% probability of them staying at the current interest rate, which is 4.25%. I think the reality really is that this is not an uncertain Fed decision. It's a Fed decision where, yeah, there you can see, what is it, 97?
Let's see.
Yeah, you can see there's basically no uncertainty on what the rate decision will be next week. That being said, every quarter, the Fed also releases what's called the SEP, the Summary of Economic Projections, which shows where do they think inflation is going and where do they think rates are going. And I think that is an SEP that I will look at very, very closely. If you click the December, yeah, that one exactly, and you have a look, expectations by end of year are still pretty wide in their distribution.
Yeah.
I think the most probable is that we will have 2 rate cuts, but the first of those rate cuts won't happen until September. So what we're expecting to see is kind of a late loaded kind of rate cutting cycle. And we've already heard that several governors say that they're happy to wait and see how the data pans out. And so even though we are kind of in a bit of a bottom of inflation at the moment, we're expecting inflation to tick up.
Yeah, because of tariffs, right?
Because of tariffs, because of oil, but also because of base effects, where if you look where inflation was this time last year, we are about to go into a period where a year ago there were several prints that were close to zero month on month. And so any inflation month on month increases we have now will just add on top of headline. And so I think there's lots of reasons to think that inflation might tick up. And I think in that environment, we're likely to see hesitancy. And where will that hesitancy be clear? It will be clear on those dot plots and the summary of economic projections that the Fed will release as part of the FOMC decision.
And it's interesting that the widening out happens even before December.
Yeah.
So the October
is very wide. If you look at September, I think is where they fully price in or largely price in the first of those cuts.
and then it becomes wider from October.
Yeah, and you can see what's interesting about if you stay in the October one. What's interesting is if you look at the kind of previous bars. From the 1 month horizon.
Yeah.
And I think that's a function of how it's pretty. Whether it's tariff or the can you exist crap. They and again they eliminate the party. Yeah. And I think so there's risks on both sides, and it will be interesting to see in the statement how they balance the two sides of the risk, the side that's related to weakness in the job market and the side that's related to inflation risk.
Interesting, interesting. That's why you talked about the SEP and keeping an eye on that. Steve Davies saying at Frank JP sticking to his beliefs. Yes, I believe he is, and probably before last night's events feeling very vindicated as well.
Yeah.
Right? Going, yeah, you know, I stuck to my guns and I'm looking good here.
I think this has been a period where it's not paid in the last maybe 2 or 3 months to be basically like long puts. And I think yesterday is a good example of how actually those asymmetric upside strategies might pay off if and when volatile events like that do happen.
And speaking of volatile events, the Operation Rising Lion. So we were talking about this earlier with Joachim from Pamio Libram. He's saying the whole, you know, drones thing is just a precursor.
Yeah.
Because he believes that the drones are there effectively to weaken the Iron Dome.
Yeah. So I think so I was listening to an analyst report this morning, like a defense analyst, and they were saying it's interesting that Iran's response has been well telegraphed and has been relatively small scale. And the reason for that is because they want Israel to know that these drones are coming so that Israel can kind of mitigate it. It means that they're essentially choosing to not escalate at this point, but it also means, like you say, that they're forcing Israel to use some of the defense inventory that they would have as part of the Iron Dome to prevent what is a lower scale attack. And so I think you're likely to see kind of continued tension in this area for at least the next couple of weeks. I think Israel, the scale of their attack on Iran was substantially bigger than Iran's retaliation. There are still reports coming out of kind of what the damage was and who might have been killed as part of those operations. I think we will know more kind of as it develops.
Yeah, and we'll also know more once the Americans start issuing comments as well. That's expected later today. No time just yet.
Yeah.
Israelis military says it has destroyed dozens of radars and surface-to-air missile launches in Iran. That piqued my interest as well, because that might mean that they've also
spend on
yeah.
and just defense stocks.
Let's see which inventories need to be replenished, right? So yeah, and
I mean, it's crazy. I honestly, so like I have a mild aversion to investing in defense stocks, right? Just from an ethical perspective.
Yeah.
But I know I spoke to you maybe 6 months ago now. And you were like, I am just super long defense. Like, here are all the companies that I'm long. And I think at the time I was like, this feels like it makes sense, but let's see how it plans out. But it feels like it's been an excellent 6 months for those assets, right?
Yeah. It's come up a bit now, but you know, since the events last night, and we have been talking about this for a long time. In fact, you know. Some economists and some analysts even called Israel, you know, the boy that cried wolf, and look at what's happened now.
Yeah.
Right. So it was all in the planning. It was just a question of when.
Yeah.
And that in the mix with you know, the kind of uncertainty that Trump 2.0 has surfaced, it just is a you know, tick box situation.
Yeah, and I think we should also say, like, look, some of the context of the Israel decision to attack Iran is probably the increased scrutiny of the humanitarian crisis in Gaza. And I think, like, you are seeing difficulty in getting aid to people who need it, and international scrutiny has been high this whole time but has only been increasing. And so in that context, I'm not totally surprised that this is the timing of the escalation in another part of that conflict. But that being said, Israel is now in kind of a multi-front war, right? They've got Gaza, they've got Yemen, and now they've got Iran.
Yeah.
And of course, all of those are interrelated to each other. It's all in the same area, but it is really putting pressure on what I imagine is inventory levels. It's also putting pressure on a bunch of oil producers in that area. So I don't know if you can pull up crude oil futures prices, but you're seeing quite a strong reaction in a relatively short amount of time, especially after a period where oil has been quite weak.
It's come off slightly now, but there was a huge reaction.
I mean, only slightly.
Yeah, only slightly, but there was a huge reaction. Let's have a look at a lower time frame here. Let's give you the hourly chart. Here we are. Right. So, and let's have a look at the 5 minute as well, because that will probably give us a better,
Yeah, so it has definitely come off, but I mean, it's still a pretty material move. And I think if you were to look maybe at the last 2 months of oil, if you zoom out, maybe on the daily, maybe or weekly,
it has
you can just see it's been a period basically in the doldrums for oil prices.
Totally. And look at the just following in on that, because we have, of course, the oil sessions on the IG platform, which is one of our very unique products here. All the usual suspects, ExxonMobil up 2.8%, right? And then your Chevron as well is up 3% there. All sessions.
Beloved Oxy.
Yeah, your Oxy. I gave you a shout out earlier on because I know you were watching that very closely. Occidental up 5.4%. And on that note, what are you doing this weekend?
This weekend is a relatively relaxed one for me. I'm going home to spend some time with my dad. It's Father's Day.
Yes.
That'll be very nice.
I haven't planned anything yet for...
He doesn't watch the show, I think. I think he might actually, but...
Hi, it's us, Dad. My dad might be watching.
That's true. Yeah. I don't have sophisticated plans yet, but there will be plans by Sunday.
Right. Okay, on that note, let us know what you guys are doing on Father's Day, and slam the like and subscribe button because we want to get to, Producer Phil, how many viewers? We want 1,000 viewers. Come on, people, get everyone to subscribe so that Steve Davis, he says you said you're not watching in your pajamas. That's so. What are you watching it?
You don't want to know the answer.
On that note, thank you very much. Have a great weekend, guys.
Bye.
Well, inflation seems to be coming in a little bit better than markets expected. That's certainly starting to revive a little bit of hope for Fed action. See how the markets managed with that information today. It was a bit of an adjustment. And what comes next as we ask consumers whether this is actually encouraging for them? What that means for the economy and, of course, for markets to follow. This is Macro Money. I'm Milius Spivak, head of Global Macro here at Tasty Live. And the first thing that we are going to do here is take a look at the data as it presented itself today, and then consider how it impacted markets, what they now think, and what this means going forward. So let's first take a glance at the performance dynamics here, because it is important to break down what markets actually did. And we can see here a little bit of an improvement, not exactly anything to write home about, but a slight uptick in equities land after a little bit of a downdraft yesterday, but the reaction really elsewhere. We can basically check crude oil off the list. It's attempting to digest. There's a fractional gain here, but that's after all kinds of gapping, and on net, actually crude oil prices are a little bit lower intraday compared with where they opened, and all of this is after a jump of in excess of 5% yesterday around the pullback of non-essential personnel from U.S. embassies in the Middle East, notably in Iraq, and that seemingly suggested that maybe there's some sort of a geopolitical clash that's coming. We didn't see that move extend today, but because there was an upside gap at the futures open overnight, we do have this modest gain. Bitcoin off on its own today, not really falling in with macro narratives, and seeing its losses late in the day, close to 5 hours after all the data came out. So seemingly doing its own thing. The biggest sort of macro narrative that captures markets today is most readily on display in yields, in bonds, in gold, and in the dollar. We see yields here take a significant leg lower, bonds meaningfully higher across the curve, and the deeper you get out into duration, the higher they go. The 10-year rate down 1.2%, the 2-year down almost a full percentage point. Taking a look at where we are on the 30-year gets you even more dramatic results. The 30-year bond today up 0.9% as compared to just 1/3% for the 10-year, and basically a flat result, less than 0.1% rise for the 2-year. If we look at what the 30-year yield did, just in the context of what's going on here, it's down 1.4%. So clearly, bonds higher, yields lower, kind of a day. We can see gold post an impressive surge, up 1.8%. That takes gold to intraday, at least, the highest level since essentially a week ago, but brings it back to those swing highs, which at the time were the highest since late May. So back to monthly highs set, or 1 month highs, as it were, set last week. I suppose monthly highs for that matter as well. And the US dollar broadly lower against its major counterparts, down 0.83% against the euro and 0.64% against the yen. That generally echoes what's going on across the dollar universe. The overall dollar index that takes the value of the greenback against its major counterparts overwhelmingly down, and that's close to 0.6%. So we have a clear kind of story of lower yields, lower dollar, higher gold here, and that, of course, paints a picture of more easy monetary policy as a suspicion for the catalyst, and indeed there are reasons to consider that as precisely what has occurred. Here's the data driver when all of this starts to take shape, and sort of what equities did is a bit interesting, because this is, of course, where they find their gains, having been soggy overnight, and then they kind of run out of steam into the end of the session, in particular in the NASDAQ, which is an interesting caveat to this story. But there is the data right here, and this is the producer price index. And we'll take a moment here to dig into this, because it is actually very important to the overall narrative. So we saw in April this shock decline in the producer price index. And this, of course, was comparable really only to what we saw right around the onset of COVID. And what this spoke to was the idea that there was inflation that came vis-a-vis the tariffs, but then that inflation didn't really show up in consumer prices because, as we've looked at before, this is April's data, and here was that decline. It was mainly driven by this decline in what's called services PPI, and that's really measuring the margins that wholesalers and retailers are looking at. And we saw those margins significantly decline even as the change in input inflation for core goods rose to the highest in at least 2 years or so. And that's if you include this errant spike, this 1 month, this 1 month jump. And if you don't, and you sort of look at this as an anomaly and look at this back over here, this was the biggest jump since the inflationary swell in the wake of COVID. So this was indicative of businesses eating a rise in input costs without passing it on to consumers, essentially taking the hit in margins, lowering their margins by 1.6%, as a matter of fact, which was a significant amount for just a single month, and in a sense insulating consumers from the cost hit from tariffs. Now, what we see in this data is that they've started to rebuild those margins back. So not only do we get a month-on-month rise in PPI after this sell-off, we can see that though you have that, the overall core wholesale inflation rate actually declined to 3%, and that was the lowest since August of last year. So you get wholesale inflation coming down. Meanwhile, we can see those trade services margins get rebuilt, both for finished goods, is what you can see here, a significant rise in margins across the various categories of trade services, with the biggest increases clearly seen here in machinery, equipment, and parts. But the upshot here is zero. All these numbers are above zero. That is to say, those margins are getting rebuilt. We likewise see in intermediate services, here was this dramatic decline in margins. Of course, now we've seen those jump back. And again, this was the steepest since some years ago, but clearly we've rebuilt. And that we still have core inflation going this way at the wholesale level, even as margins rebuild, that was encouraging if you were concerned that there was a consumer price index mirage here, telling you that you don't have tariff-driven goods inflation to spook consumers and hurt the economy. But that only looks that way because, at least in April, those consumers were shielded from those price rises. They stopped at the wholesale level and didn't make it all the way to consumers. Now, yesterday, of course, we saw consumer price index data that came in a little bit softer than expected, but generally in line with recent dynamics, this kind of encouragingly normal set of numbers, where the core stayed at 2.8%, the headline increased less than expected from 2.3 to 2.4, whereas a rise to 2.5 was expected. But most importantly, goods inflation, excluding food and energy, this bit where you might have been worried that there's going to be a tariff pass through of costs, that didn't happen again. But markets didn't really run on this because they seemingly looked at it and said, right, let's look at the PPI before we make up our mind here, because if this is anything like April, it might be a mirage again. Well, apparently not. Because as we look at this this set of PPI numbers, it is lower, and it is lower despite the fact that the pass-through has seemingly resumed and margins are being rebuilt. In other words, we have a genuine sense that maybe inflation isn't as hot as people feared, at least for now. Moreover, we also have jobless claims surging, pointing to a weakening labor market. The 4-week average for initial jobless claims up here to some of the highest levels we've seen in quite some time. We can see the reference point here is 2023. So we're talking about nearly a 2-year high on the 4-month average for initial jobless claims. So we have cooler inflation and a labor market that seems to be continuing to weaken. See jobless claims here, again, the 4-week average building into a steep advance really since the beginning of the year. And now overcoming anything we saw last year and going back to this scare here. So all of this, not surprisingly, giving you the sense that the Fed may have room to cut rates more vigorously than was feared, at least at the start of the week. We can see here we've almost fully realigned with the baseline expectations from the Federal Reserve. It said in December and then reiterated in March that it is looking to see 100 basis points in rate cuts over the next year and through the end of next year. So that's 100 basis points in 2025 and 2026 taken together with 50 basis points apiece. We can see here we've realigned within a hair of that here. The total tally now baked into Fed funds futures, 97 basis points. Next year is fully aligned with the Fed at 50 basis points. This year, almost there at 47 basis points. And perhaps most importantly, we can see that this cumulative line was meaningfully less dovish earlier in the week. It has now moved back. So we've on net moved by almost 10 basis points in a more dovish direction since the start of the week, and the mix here has reshuffled. So while, for example, as yesterday, we were looking at a similar tally, 97 basis points on net, it was 44 basis points for this year, 54 for next. So there was a bias here, and at the start of the week, it was even more dramatic, 40 basis points this year, 50 basis points next year, for a total tally of only 90, suggesting that there is less scope for rate cuts and that this year would see meaningfully less, while next year would see comparatively more, because the Fed is biased to waiting later and doing more next year versus being more cautious this year. You can see that has somewhat unclenched here. And so, not surprisingly, against that backdrop, we had this response from markets: lower yields, higher gold, weaker dollar. Now we turn to the last bit of U.S. economic data for the week, the University of Michigan Consumer Confidence Survey. And this is perhaps the most potent leading indicator for what is actually the most important contributor to economic growth, household consumption. And what we are looking for here is a slight improvement. We hit this near 3-year low in March as inflation expectations surged. We anchored a little bit in April, where the expectations index, you can see, nudged up a little bit, even as the current conditions index continued to deteriorate. And this seems to largely reflect the pause in the White House's reciprocal tariffs above 10% at the start of the month. So we had that big shock with Liberation Day and the foam board with all kinds of large tariff rates across many countries, and not surprisingly, the markets freaked out. we then had, marking the bottom for stocks in April, the announcement that those rates would be put on a 90-day hiatus. And then a little bit later, so initially China was excluded. Then we had some conversation making by officials in Geneva and reiterated by another meeting in London just this week, after there was a little bit of a tussle back and forth, sort of putting the Geneva deal in question. Well, it seems like we've walked away from that. And so we have a situation in April where there's slight anchoring in the expectations component of consumer confidence around the idea that we have this 90-day hiatus, and maybe we don't have to quite go as far as the foam board told us. So what we look at now then is a little bit of an improvement in consumer confidence. And of course, this is very much a critical input, because as we saw in the first quarter GDP numbers, the mess around front running of tariffs creates all kind of fuzz in the GDP data. We saw this dramatic jump in imports, a huge burst of inventory building that ends up in the investment component. And what that gives us is a narrowly negative GDP number, because this enormous import jump around front running of the tariffs skews the data. And everybody, of course, looked and said, well, that's not a real negative number on GDP. It's just the front running of the tariffs. That's going to run its course eventually. And arguably now, as we head into the end of the second quarter, that has already run out of steam. In fact, looking at data out of China, as we did yesterday, we saw that on display. But the real takeaway here wasn't really the front running of the tariffs. Because if we look at the components of GDP, we can see the external sector is an afterthought when we compare it with what is the main driver, the real driver of U.S. economic growth, which is, of course, household consumption, domestic consumption. And that's 68.5% of GDP. Whereas if we net out exports and imports, which is what we do when we do the GDP calculus, exports add to GDP, imports subtract from GDP in the math. And so what you do is you take net of the two, and we can see here exports are over here, imports are over here. Imports are slightly in excess of exports here, so we have this net deficit. And what we find is that this on net is less than 4.5%, 5% of the overall GDP pie. So you would need these dramatic swings to really see this make a meaningful impact. But consumption, the most significant part of the story, that's at the weakest in almost 2 years. Going back to a reference point in the second quarter of 2023. Moreover, just today, we got a release from the Fed that's tracking the financial accounts for the United States, and that showed that household net worth fell nearly 1% year on year in the first quarter. And that's the first decline since we had one in the third quarter of 2023, and the largest since the third quarter of 2022. So the consumers clearly retrenched here in the first quarter and decided not to come out and spend. And this is why this consumer confidence reading is so important. If we continue to see relatively weak consumer confidence, well, that might boost the case for the Fed to move sooner, as the CPI and PPI numbers might suggest. If, on the other hand, consumer confidence goes higher, then maybe that case is diminished. The worst possible thing here, of course, is if we continue to see very elevated one-year inflation expectations from consumers, because that would, of course, get the Fed thinking twice about rate cuts, because it doesn't want to let those inflation expectations run and get unanchored here, because that would show up in overall inflation data rather quickly and hurt growth. So how these numbers are going to shape expectations for what the Fed does next ought to be very interesting. If inflation expectations come in a bit and consumer confidence stays relatively tame, in particular around things like this surge in jobless claims pointing to a weakening labor market, well, then you might get a replay of what we saw today. That is, more Fed rate cuts being baked in. But the question then is, can equities make hay of it? They were the most soggy of the responding asset classes here, perhaps because the case for Fed rate cuts is also the case for a weakening economy. That's not the best news for cyclical assets that look to U.S. economic strength to fuel earnings growth. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris on Fridays for Futures Power Hour, as well as Mondays. On with Victor Jones for the Price of Truth on Tuesdays. Back with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com. And commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Thanks very much for watching. Macro Money is back next week. Happy trading.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today is another pretty choppy day. We're kind of trading within a range here. We got some news to catch up on. We got some Boeing news to touch on, some Trump speaking points to touch on. But before we get into all that, Gus, how we doing today, brother?
Doing good, hanging in. Yeah, we got no shortage of news today. It was quite the news day. I have traded this Boeing news. We will get into all of it. But yeah, I'm hanging in. Is the short answer. Been running all over the place. We're doing promo for our wonderful events in London and Milan. If you guys happen to be watching from London and Milan right now at 11:35 p.m. local time, maybe go to bed. But you should also come check out the show, man. Tom and Tony, they're world tour.
Yeah,
you guys gotta come
for a little bit. Yeah. Oh yeah. No doubt. I hear you were touching. You're getting involved with Boeing a little bit today. I know we got that pretty big gap down. We'll get into the platform here in a little bit, but goodness gracious, did you see that video? I didn't even know if it was real at first. We're in that day and age.
Yes.
So I was scrolling.
Yes, we are.
So you know what's funny? Before we even get into all of that, I was scrolling on social media a few days ago. Some of these AI videos are so good. Gen Z humor. Some of the comments in Gen Z humor got to be top tier. Like, no joke. Some of the intelligence behind certain jokes takes such an intelligent mind to even think of. Like, you'd be so surprised. Keyboard warriors be having the most funny things to say sometimes. But anyways, some of the AI videos are so good. Some of the comments the Gen Zers are saying like, yo, I'm definitely getting scammed when I'm 40. And I just think that's so hilarious because we're the generation that's like, so we don't get scammed. We're so tech savvy, this, that, and the other. And we see a piece of technology so good. We're like, oh yeah, I'm getting scammed when I'm 40. I'm getting scammed when I'm 50. So I don't know, this AI is getting crazy. I don't know if it makes a case for the blockchain, but I thought those comments are hilarious.
Well, yeah, it's the same logic as like what people will say about cults. Like if you think you could never get sucked into a cult, you're the perfect target for a cult. And it's a very similar situation with AI and these scams now. The videos are getting crazy. This Google VO3 is nuts. I've been seeing so many things that are crazy. Like I saw one the other day where it was like actually a guy like vlogging, walking around on a cruise ship as though he was like holding his arm out with the camera, and it looked so good.
Something like that.
Yeah, it was super PC. I won't elaborate
I mean,
further
AI
if we saw the same one, but and then also the pictures now are insane. I actually just earlier today I saw a picture and I did not realize it was AI until I went to the comment section. I went to the comment section to figure out why the kid was crying in this picture, because it seemed to be like a happy thing that was going on. It was like a kid sitting at a table with an art project that he had just finished that he was going to turn into school tomorrow or whatever. Obviously it's AI, but I really didn't realize. I would have just thought it was just a real picture that I saw scrolling through, and it wasn't until I went to the comments and I saw people mention it that I noticed if you zoomed in real close on the scissors on the table, they didn't look quite right. But it's like, it's getting crazy, and I worry about my parents and about my grandparents. I mean, I worry that somebody could. I mean, I'm here doing this public facing thing, as are you. Somebody could, take my voice and do whatever they want with it. So it's really scary these days.
No, 100%. So a few weeks ago too, I was around some family friends and things like that. Met some people. They had kids, and they had a younger son. I think he might have been maybe 8, 9 years old, maybe 10. Maybe 10, 11 years old, but he had shown me this picture on his phone, and it was this digital photo of this cat. And he was like, look how real AI looks. And he was showing me this, like, you can't even tell. And I'm like, in my head, I'm like, that is clearly, like, that is no question. That clearly looks like a digital cat. But it's even crazier that, certain AI is even fooling the younger minds. I had to humor him a little bit, like, oh, wow, yeah, AI is getting crazy. But it was just crazy.
He's not watching right now, damn.
Yeah, no, I know. I was like, it just blew my mind. I was like, I know younger minds are more susceptible, right? I mean, 8 years old, 9 years old, you're going to have a more of a difficult time to tell what is real and what's not. But if we're getting fooled by things like that, and we have a fully developed frontal lobe, just imagine kids' brains that aren't even fully developed yet.
Yeah, I think anyone that grew up around TV, I mean, anybody that's grown up in the last 40 years or so, there was a point in your developmental life where you couldn't really conceptualize the TV. Like, I remember being like 3 and 4 and thinking that these things were like actually happening behind the TV, or like I didn't really know what was going on.
True, good point.
And so, when your brain is at like that level of processing power, you're obviously super susceptible to be fooled by these AI things. Yeah, it's very scary. It's getting crazy out here.
100%. We'll dive into the platform here, and we'll check out Boeing first. What was your initial reaction off of that, Gus, when you'd seen it? Did you think it was AI right away? Did you want to look more into it? Was it just another plane story? What was your reaction like?
No, never thought it was AI, partly because I've been so conditioned to, I guess, negative Boeing news in the last few years. But 100%. It never crossed my mind that it might be AI. I did see perhaps the most interesting part of this story, which people don't seem to be acknowledging, is that the one survivor jumped out of the plane, which is crazy to me.
Oh, really? So I saw the one survivor. I had seen him walking away, but I didn't know that was a story. Did he walk away?
Yes,
he jumped out.
He was sitting in, I believe, 11A. It was an exit row, and he jumped. And he was the only one who lived through this somehow, which I don't even understand how the mental calculus you do to figure out that you might have a better chance if you jump. I feel like it's a panic response that just worked out. But yeah, I think that's one of the craziest parts of this story. The trade that I have put on, I basically just sold some premium back to the upside here, pretty much right from the bottom. I mean, this was very early this morning, maybe 9 a.m. Central. But I just trust that people are going to overreact to these things. And with Boeing in particular right now, I love playing these overreactions to Boeing news, because we don't know anything about this yet. It could come out, they could say that the pilot was drunk, that they didn't do proper maintenance on the plane. There's all kinds of things that could be not necessarily Boeing's fault that could play into this. And even if it is Boeing's fault, I feel like that's an accurate move to price in one plane going down. And I want to say, my dearest condolences to everybody who lost their lives in this event. We sit here and we talk about things in a market context. This is obviously a horrible thing. But yeah, I just felt like it was an overreaction. I feel like the market likes to overreact to Boeing news. So yeah, I just went short put spread to the upside. I sold the 195, bought the 192.50. They were very, very cheap. I bought a number of them to even get some solid equity into this position. But yeah, feeling good about it. 195 would be another continued down move. These are 0 DTE now. Basically, they expire tomorrow. So yeah, just super short-term thing. If we stay above 125 until close tomorrow, I'll max profit out on those. But yeah, I expect the market to overreact to the slightest Boeing news. And so when I saw major Boeing news this morning, I was all over this one to the upside.
Yeah, no, 100%. I like that. It is kind of surprising from a technical perspective too, how resilient Boeing is to this news. I know, like you mentioned before, we're getting a little conditioned to hearing these news topics about Boeing flights crashing, flight issue, whatever the case is. But I mean, for a plane to crash with so many Fatalities too. I mean,
and so close to takeoff as well. I mean, like immediately after takeoff.
I've never seen anything like that. Yeah, no, I've never seen anything like that. I know I was, the comments isn't the best research, but I do know I was hearing some takes. Was the plane stalling? What was the case? I'm interested to hear more details that come out. But I've never seen the plane take off and dangerously high, but not low enough to where you can cause some serious damage if you don't stay above the ground. But I've never seen a plane crash like that before. But again, from a technical perspective, I would have almost thought Boeing would be down even more considering what happened. Because again, it's not like we get plane crashes every day. I know we hear a lot of horror stories about planes lately, especially in the media, but I mean, we really don't see planes crashing like that every day out in the sky. So I'm interested to see how this is going to digest, because it seems like an underreaction to me, at least on my end. I know it looks like a little bit of an overreaction, but it almost looks like an underreaction considering the magnitude of this event. So
yeah, it's interesting. Mike, maybe the door fell out, maybe the door fell off and he was sucked out of the plane and then it also happened to crash. That's insightful. We do know that to happen. Yeah. And I'll say too, I've sat in this chair before and complained about how much the media loves to report on anything and everything Boeing ever since the Alaska Airlines flight where the door blew out. And that's true. This absolutely does not fall into that category. This is a very large scale. Yeah. Like you said, high magnitude catastrophic thing. This absolutely should influence the market, and I'm not surprised at the sell-off we saw this morning. I'm pleased with the continued buying back that we saw throughout the day today, however small, for the purpose of my trade. But yeah, I don't know. I think
I like it though.
And a lot of my line of logic with this trade too was that I just simply think it will be next week before we actually figure out what happened. These investigations take a little bit of time, so I think that before any more like this is definitely Boeing's fault news could kind of break, hopefully this trade will have already expired and I'll just be out of it. I really don't like trading Boeing in general, but this was an attractive spot.
I know. How high was the plane when he jumped? I'm not sure how high the plane was when he jumped. I'm not sure if you heard details on that, Gus, but I do know, if I'm not mistaken, the plane was around 290 feet in the air. So that's not super high up, but I mean, that's high up, obviously, to do a lot of damage. So when he jumped, who knows? I'm curious to know, did he pull the latch? Like, did he choose to jump out of the plane? I know I've seen people talking about,
I have the story here. Yeah, he was sitting next.
Okay.
He was sitting next to the emergency exit, and he chose to open the door and jump out. He told media he's a British national, was traveling with family to Britain. Let me see this. Oh. No, yeah, okay. All Reuters is reporting is it is not clear whether he managed to jump out before the plane made impact. So they're saying it might have been after he jumped out.
Okay.
Which is interesting.
We'll see as more details come out. I think the underlying itself is probably waiting for more details to come out before it decides on where it kind of wants to go. So, I mean, huge story right now. So we'll be looking out for that. Yeah, good on him for some situational awareness.
It is supreme situational awareness, but that's what I was getting at. Is I mean, if you're in your plane seat, I don't know how you could possibly deduce that that's your best move. I mean, I guess you know that you're in an urban environment and you haven't gotten far enough. I mean, if you're going to hit a building, it's going to be bad. Like you need a field or open expanses to like properly, crash land a plane and have there be some survivors. So I can understand like scaling out that gravity, but you don't see much out your plane window. I'm confused.
Okay. Well, a really good point is being brought up. He jumped without his family. Okay.
He was on his way to see his family. It was their family.
On his way to see
in the plane with him. I'm not sure.
I'm not sure of the details, but I will say
he was with his brother. His brother was in the plane.
Oh wow. Maybe it's just a response. So I don't know if you heard not too long ago, there was a young lady going paragliding. Did you hear about that story?
No. Oh yes, she had an anxiety attack and like unclipped herself. Yeah, I saw that.
She unclipped herself, right? So it's like from the outside looking, it's like, why would you do that? That doesn't make any sense. Maybe it was just a response, a fear response.
Well, yeah,
you know what I'm saying. So
that's all I can deduce is that it was just a pure panic response and not thinking clearly. He was like, "Here's this door. I'm going to take my chances before this plane hits the ground, or maybe after. I don't know. I guess that's unclear at this time." But yeah, I think that it was just a flight response that just happened to work out really well. That would almost never be the right call, but it worked out in this case.
It did. So, I mean, we'll swing it back around to that story whenever we get more details out. American Airlines gapping down overnight. United Airlines gapping down pretty much just as much. And then Boeing taking the brunt of the hit, obviously, because of the plane going down there. But we'll see if these will rebound. Let's take a little bit of a higher time frame perspective on American Airlines and United Airlines before we pivot here. So these are getting hit a little bit. I mean, they weren't really doing too much since then. They've kind of been selling off since the beginning of the year. Trying to rally since, and we kind of just been trading within a pretty small zone, so haven't been too volatile on this end. As for some of the other positions, again, SPY, this market has been really boring. I don't know if you have any thoughts on this overall market, but the last few days, I feel like it's been really choppy. I feel like most of the directional moves have been put in overnight, which, leaves, market open until we close kind of dead. So that's kind of what I've seen. I know Trump was speaking earlier today. I know I flipped on one of the channels today, and I know he was speaking live for a little bit. So even when he was speaking, we really didn't get too much volatility in the market. So that was a little surprising too. Even yesterday, we had some CPI numbers an hour before the bell yesterday. And the market kind of still feels like it's deciding on what it wants to do. It feels like it's in that limbo phase where one side of the market is trying to see if we're going to go to all-time highs. The other side of the market is prepping for a down move. That's kind of what it feels like. That's like the two sentiments that it feels like it's flipping back and forth from. And it feels like right now we're kind of at that pinnacle moment where we might shoot up to all-time highs because we're so close, or this could be the start to maybe a decent down move. So outside of that, nothing too exciting on my end, Gus. I know we have the SPY position, 9 days left to expiration. NVIDIA, 9 days left to expiration. Both of these can't really do much about. Unless the market wants to gap down and continue to sell off, put some legs into the downside, then we can recoup some of those positions. But even looking at this, right, we're on the daily chart. I mean, this is some pretty choppy action. Not much is going on here. If you sold some premium on this, premium sellers are definitely winning in these moves because we're trading within a very narrow range. And the value of these contracts are just seeping out very slowly. So not much going on in there. Same story as the SPY position. Disney, we're getting a little bit back on Disney today, but not too much. Disney's been going on an absolute tear. So that position has some time to work out, but not looking too hot in there. And then we got the micro NASDAQ position. We're short on the overall market right now. So this is what I got in here, Gus. Nothing too crazy. I'll manage this if the market decides to run to the upside tomorrow, maybe, but I do have a short position on. And if we take out maybe today's highs, I'll look to start managing it, but we'll see how that one's sitting overnight. Other than that, that's what we got going on. The market's just been a little bit boring on my end, at least. I mean, the choppy price action has been like watching paint dry. It still feels like something's brewing. Volatility index, I'm still waiting for that to pop, but it looks like it's coming. As each day gets closer, Gus, we got to be closer to a big spot. So we're hopeful.
Yeah, I think you hit the nail on the head with at the beginning there. It has been choppy. The moves come after market, and then we kind of establish ranges in like the first hour or two of the day every day, and just stay within those ranges, bouncing around for the remainder of the day. I absolutely agree. My portfolio is a bit more exciting at the moment. We got things going well. I have where to even begin here? It's so funny. We never show my portfolio. We can hop over here if we want to go ahead, but it's a sharp juxtaposition to the way that Errol's portfolio always looks nice and organized with just like 3 to 5 positions. I'm always spread out pretty hard, but I have. Let's see. I guess we'll start. I have 3 things expiring tomorrow. I do have a Tesla trade in here, you will notice. I went short a put on Tesla way at the bottom. It was like the day, I guess all that stuff, the Trump Elon stuff happened a week ago today. This would have been like Friday morning. I went ahead and shorted a Tesla put. I think the lowest it ever got was 240-ish. Let's see, not even. This is days. Yeah, so... Am I tweaking? What time frame am I on right now? Today is the 12th, so I'm looking for the 5th. Okay, yes, I was correct right here. So yeah, 277, 275 is about the lowest we ever saw in Tesla. Right when we were like, it was pretty close to those levels, maybe 280s. The premiums were just so insane with the way that it was taking a nosedive. So I was compelled to go ahead and sell a put, and that looks like it's going to work out swimmingly. Additionally, I have this short Chewy position, which I mentioned earlier this week that I put on ahead of earnings. Worked out very well as well. Nice gap down. It actually made the equivalent move downwards that it would have taken upwards to bust me. So I was a bit ambitious with my thoughts about this thing isn't going to move very much after earnings, but fortunately it moved the right direction. And then, yeah, as I mentioned, I have this Boeing vertical on. I got that on this morning. So that's everything expiring tomorrow. If you look at the probability of profit section here, I'm feeling pretty good about my positions expiring in the next 3 weeks. And then, yeah, moving beyond that, Procter & Gamble, this one's been frustrating. This thing will not move. I think it has good upside to it, and that's the trade that I'm placing. But, yeah, plenty of time left on that one, but would love to see Procter & Gamble get over 170. And that's pretty much the only thing that I'm keeping up with in any sort of depth. This is the Q composition that I've mentioned a few times. We were over 160 briefly. Now we are not, but I have gotten nice appreciation on both of those contracts. So holding firm on that front with 36 DTE on that front one. And yeah, that's pretty much all the exciting stuff. Got my VIX hedge, perpetual VIX hedge, Match.com, which I've talked about before. Got shares, got a vertical there, which is also doing very well. 97 probability of profit on that one. So sitting pretty, mostly long delta still, but I have slowly been trimming out of things. I've been slowly trimming off some of these shares. I've fully closed my Apple and Google shares positions earlier this week. Just kind of trying to brace myself here. I believe Lone Sophos has said before in chat, all-time highs bring all-time resistance. That's a quote that I like. And it's true. As we near all-time highs here, I just want to get a little bit more delta neutral as long as I still am. But it's been crazy. What were we going to say? Sorry.
No, I was just going to say, I mean, I really like it. I mean, we're really inching towards that all-time highs too. So, I mean, if we do end up getting that pop, it almost feels like if we put in one more leg to the upside, we're going to be rounding off all-time highs. So your portfolio is going to be looking really nice if we end up doing that. So, I mean, I hope we do see that for your.
Yes, and trying to do that dance that you just described of striking a balance between wanting to still be long delta in the event that we do make all-time highs and kind of break through that and test some new territory out, but also wanting to be prepared in the case that we just bounce off of all-time highs and start to move back down. So yeah, it's been delicate, but feeling good.
No, 100%. But since you're leaning so long delta too, your position's so nice because if we do get all-time highs, you could take off 4, 5, 6 positions. Feel satisfied and comfortable with that, and you still got some long delta going. And then at that time, you even have a larger cushion. So honestly, I think you're positioned pretty well. I really like your standings right now. So
yeah, exactly. It's just especially as we've creeped back a lot of this. I mean, I got so long like at the bottom, which was the right thing to do, and I think that most tasty people were thinking the same way. Yeah, mid-April around there. So started to load things at that time, and now we've had the V-shaped recovery, which is almost complete. We're pushing towards these all-time highs again, and so it's just now I'm just starting to get a little bit antsier. It's also been over 2 months now since that volatility event happened. I worry when the next one might be coming, and in this environment, it can just happen any given day. So as that starts to become a greater and greater possibility in my mind, I am slowly starting to trim out of things and take profits. I've done incredibly well coming out of this, so I'm happy to take my profits here. But yeah, barring something catastrophic, I should be just fine. It would just be if we all of a sudden take a 6% dip in SPX in a single day, that everything starts to get a little bit dicey for me. But fortunately, got a nice cushion of profits sitting there too from the run up. So it's a nice balance.
Hey, we take a 6% dip in SPX. I'm cashing out on SPY and NVIDIA tomorrow. We do that. So
you're rooting for the 6% dip on SPX. I know you are.
No, I know. I mean, 6% dip on SPX. I think we see high 50s in the VIX, something like that. If that happens in one day, but either way, no. VIX is looking like it's waiting to pop. It's been really quiet. I mean, I know VIX hasn't popped yet, but I mean, I feel like that's even a testament to how these few days have been in the market. I mean, we haven't even really gone down too much on VIX. We haven't gone down too much on VIX. Market feels like it's just waiting for something, whatever that may be, tariff news. Whatever the case might be. But it does kind of feel like we've been waiting on a lot of the tariff news, but the market doesn't feel as sensitive right now to any type of like tariff headline. I'm sure it would move the market, but it doesn't feel as tense right now. I don't know. Trade tensions doesn't feel as tense to me right now as it once felt, maybe even just 4 weeks ago.
No, I absolutely agree. And Mike, you make a great point in chat where 90-day pause is up in a few weeks. I believe July 9th or 7th or something was the day that we decided that is. We
like 3 more weeks.
Errol and I, we worked hard to figure out what day it was, and then I don't know anymore.
Every time.
Yeah, but for like first week of July, basically, is the thought process. But yes, Mike, you make a great point on that front, and that's actually something that I'm going to start attacking early next week. Is really diving into research, because Liberation Day was so nuts. There's north of 100 countries that are getting tariffed, including like Antarctica and everything. And there's been a lot of resolutions made, and we've made some headway with China, but we're not all the way there, and it's all kind of been nebulous and confusing and hard to keep up with. So I'm going to early next week begin researching and start to kind of have a more definitive stance on what I think will happen after that tariff pause is up, kind of how that all looks. It's obviously a highly important thing to game out. So yeah, that is on the forefront of my mind, and I'm unsure of what is going to happen. On one hand, if we, as that deadline creeps closer and closer, if we all of a sudden reach a bunch of resolutions, suddenly that could be like this pressure that's been on the market this whole time, even amid this recovery, is lifted and we go higher. There's all sorts of angles that could happen here. So yeah, Liberation Day tariffs on the forefront of my mind for sure.
No, 100%.
Oh, they extended it another 90 days for any country that didn't retaliate? That's news to me, Emmett. Thank you. Interesting. I didn't realize that was the case. Okay, well now I got to find a list of countries that didn't retaliate. I don't even know. I don't know what that means. But I'll tell you what though, something I am really looking forward to trading into that cycle is the country-based ETFs. They have them for pretty much all major economies in the world. That's a really, really good way to get just some sentiment exposure towards these things, because when the tariff situation is it's very far from black and white, but in the case of these individual country ETFs, like I talk about yin and yang a lot for China, if you're going to get yin, that's long 3x long China shares, the market will react accordingly to whatever the tariff news is for all of these different countries, even if it may not be a justified reaction. That is the way that the price tends to move. And I made a lot of money on Yang, getting long Yang, which is inverse China ETF, into Liberation Day. So there's a lot of attractive angles. Volatility is always good. You would rather trade in volatility.
Yeah.
So we'll
100%. Volatility is a trader's best friend. No, that's a really good point. I mean, with so many tariffs going out, so many different deals with different countries, I mean, you're right. There are specific underlines that you can get a little bit of that sentiment exposure to. I think you laid that out perfectly. Anything else before we wrap up on here today? It looks like the Pacers got the best of OKC for game 3, Gus. So, I don't know. Maybe it's Halliburton's time. I don't know. Shy.
It might
MVP.
be.
I don't know. We'll see what we get.
Halliburton hasn't shot a free throw in the month of June, man. It's ethical basketball.
I've seen that. I saw that stat today. Is that ethical basketball? I mean, that's a complete polar opposite of what's going on with the MVP right now. So take from that what you will. But anything else to add before we hop on out of here, guys?
No, nothing else. I said at the beginning of this series that if Indiana won, it wouldn't surprise me. They've been surprising everybody this whole season, and here we are. So yeah, let's see if the Pacers can bring it home.
All right, we'll see what we get. We are wrapping up with some time here. We will be circling back here next Tuesday at 4:30 Central Time. But be sure to stay tuned for more segments coming on next. And we'll catch you guys next time. Peace.
Oh, yeah, it is Thursday, June 12th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast. A little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. But if you want to be part of Bing, this little chat box on your screen, there's only one place you can do it, and that's on the evil Google YouTube. So head on over to YouTube, find the Tasty Live YouTube channel, There's too many YouTubes there. Find the Tasty Live YouTube channel, subscribe to the channel. That way you can stream your thoughts, both appropriate and otherwise, right here on the screen. There's no moderation. I'm just kidding. The producer's like, stop. Will you stop telling them to put crazy things in the chat and making my job 10 times harder? Speaking of the chat, I should say what's up to the chat. Shout out to everybody in the chat. I'm looking at you, Lone. What's up, Brian Watson, the YouTube goat? Emmett Morrison, how are you? Brian. Donna Ski. Catan, how are you? Sunflower. Hey, Victor Jones, you're in Singapore, right? Why does the market fluctuate so much during evening hours? Is it because the news cycle varies so much per country? There's really just 3 market cycles. There's a U.S. market cycle, sort of window of time where U.S. liquidity is what matters. There's an Asian market window of time, and there's a European market window of time. So you're basically just tracking those 3 areas. Each can have its own dynamics. Risk in many ways, the beta of risk of U.S. markets, in particular futures, can react to U.S. and European liquidity dynamics and vice versa. So I think we're in a period of time where geopolitical concerns, trade concerns amongst the different countries can have major impacts. Therefore, all 3 markets are fairly sensitive to each other. I suppose that's the way that I would lay it out. But I would also say there's been sort of this familiar pattern with a lot of this little march higher in U.S. markets. And the familiar pattern is most of the time you come in here and markets are open, your futures are down like 0.5%. It's very rare. I mean, somebody could do the analysis. I just watch this stuff anecdotally. But it's very rare over the last, I want to say 3 weeks. I want to say at least 60% of the time, equity markets open, you're down 0.5%. And generally you climb a little higher by the end of the day. So, I don't know that I personally look at it like it fluctuates so much overnight. I suppose the right mental model, this may not work in the future, the right mental model is every morning they give me a discount. That works until it doesn't. Shout out to, Sunflower, you got me going already. Usually I like to do, a little, I like to talk a little bit up front, okay? Don't like to get straight into the wham, bam, thank you, ma'am of the show. Carlos, how are you? Grumpy Mike, John Steen, JDD. Wow, we got the whole crew in here. What's up? Mark and all the rest of you. I see you. I appreciate you. Damn it, I love you. I'd reach through the screen and give you a big old consensual hug if I could. Emphasis on consensual. What do you say we get going, people? Another day, another day, and markets grind ever so gently, ever so daintily. That's the good word. Somebody give me a really good word for just how lightly the market is floating up higher each day. 0.5%. Plus or minus 10 basis points is what you've been doing almost every day, man. And you start down 0.5%. So from a trading perspective, it feels like you're getting a 1% swing. If you're just trading equity cash, you're getting about 40 to 60 basis points every day. Congratulations. You having fun? You having fun with this boring ass market? SPX. Much more happening under the surface, I suppose. SPX up 2/5%, The NASDAQ up 0.25%. The Dow Jones decided to move a little bit today as well, up 0.25%. And the Russell, because small businesses will not survive, are down 0.25%. It was ugly this morning. Russell was down like 1% at one point. I think the NASDAQ at worst, as well as the S&P, were down about 0.4% prior to the open, is what I saw. Then there are the midnight tweets. Yeah, I don't know what time it was for you guys, but yeah, there was the tweet that came out of President Trump's Twitter talking about tariffs. I forget what exactly he said, but just a bunch of nonsense. Trump said he will set, where was it? I just lost it, sorry. Trump said he will set unilateral take it or leave it tariffs on trading partners in the next 2 weeks. And that came out about 12 hours ago. So that was pretty early this morning. The markets were already a little weak, but only by maybe 20 basis points. That probably doubled it. So yeah, the late night tweets, probably not a bad reasoning here either. Levitating, I like that. Catan says, ever so gently sauntering, Brian, with a little bit of thesaurus work out there, doing God's work. I appreciate it. Tesla did sell off. Tesla was weak today. Down by 2.25%. I think the apology rally is over, and now he's got doesn't he have that robo-taxi thing coming up? Robo-taxi announcement or release. Now I think he's just got to put up or shut up. But he'll come up with something. That's the world's greatest huckster. No shade. He's just really, really good at talking his stock price higher. I don't know if there's much to do there anymore. I think it's just a coin flip. Whatever he's able to convince the market is, if he's able to hit is it the June 22nd date? June 22nd or July 22nd is his next big robo-taxi announcement. So I would expect I don't know. Market doesn't really look like. There's a little kink involved here. Is it July 22nd? It must be. Because if it's June, the markets don't care at all. So it must be July. Somebody help me out with that. I should know that offhand. I don't know it. I don't want to misinform anybody. So if you know the date of his next his robo-taxi announcement or release or whatever, you just do me a favor and drop it in the chat. But 6,037.50 on the S&P, still floating below 22,000 in the NASDAQ. Grumpy Mike says, I bet he has his 50th kid before the robo-taxi is made available. It's good work if he could find it, I suppose. VIX, 18 and change. A bit surprising. Because if you think about it, the rule of 16 says that an 18 VIX is something like a little bit more than 1% move, 1% expected moves on a daily basis. So 4 points, it's like a quarter. It's like 1.125%, I think. Is what you should expect on a daily basis. At least 2 out of 3 days, you should be getting that type of range, and maybe even 1 out of every 3 days you should be getting outside of that. And I don't think we're coming close, man. I don't think we're coming close right now. So vol at 18 on a relative basis, we came from being above 20 and in the 40s and spiking to 60, it feels low, but relative to realized vol right now, realized vol is on the floor. You know, it's on the floor for the last couple of days. If you're using just cash markets, again, the swings from low to high are a little bit greater than that. The swings from low to high might reflect an 18 VIX more appropriately, but on a close over close basis, realized vol's on the floor. Let's keep going here. We did get our move. June 22nd for the robo-taxi, says JDD. Thank you. That's wild, because the option market doesn't care. Am I crazy? Should we not see a little elevated vol in in the series where, unless the market doesn't believe he's going to make that time, unless they think he's going to push it back. But this series, if this was important to the marketplace, should have a bit more elevated vol. I guess it's 5 points higher. But then the next week is 4 points higher than that. Strange things with Elon. I guess it's hard to pinpoint Elon, you know. So you got to spread the vol amongst the 2 weeks and just and prepare for the idea that he delays it by a week. Maybe that's what that is. We got our move. We got our continued move in the 2-year. So we got down to like 39 basis points. Everybody, we had said, I'm sorry. I'm getting over this. That means that I'm going to have the most congestion right now. And so hopefully when I come back off the break, I won't sound like a lounge singer from the 40s. Just smoking cigarettes and hacking on a microphone. ZT, we got a nice little rally in the short end of the curve, which means, you know what that means, my babies? Means our little bet that once we started to get close to one cut for the year, the thesis was that was probably, and they weren't really, they only rotated like one cut to the back to next year. that was probably an interesting place to start taking bets that will move the other direction. Because either you have to believe that they're going to get to neutral and say, okay, we're taking all cuts off the board once they get to like Jackson Hole, which is totally possible. That is very, I would say that's total live probability. I'd say that's like, maybe it's a 30% chance, maybe higher, but I'd price it about a 30% delta. And the rest, I would say, is they keep playing this extend and pretend game. They keep delivering and sort of talking markets off of cuts in the short term and then sort of placing them out a little bit further in time. And to some extent, I think that's what we saw here. So September still on the board, 93% probability in the aggregate that we ended up with a move there at the first with the first cut. And markets can't really figure out when the second one's coming. But second one right now, let's say, is in December. So it's now fully priced, that second cut. So we went from like 39 basis points into fully pricing that second cut. So it was a pretty good bet. I mean, there wasn't a ton of money to have been made here in ZT unless you just levered up. But we're starting to move the opposite direction, away from moving towards a single cut to no cuts for the year, and starting to move back solidly into two cuts. So I don't know that there's much edge here. With only 6 months left, two cuts price, that seems about fair. And my guess is we'd stay in a pretty tight range from here on out, unless something radical happens with the data, or they choose to pivot. They choose to use Jackson Hole as an opportunity to pivot into a more neutral stance. Barring those things, I could totally see us staying here for a little bit of time. You give them enough time to get all the way to September. That's a lot of data to see between now and then. And depending on how that data looks, that allows them to either cement 2 cuts for the rest of the year or move off of it. If the inflation data stays sticky or even reverses to the upside, and if claims start to move aggressively higher or the employment picture changes, I think that helps them to firm up the 2 cuts. And if they don't see those two things, you know, I think even 2 cuts could be unlikely. We could end up with 1 for the rest of the year. I think no cuts at all is still a live probability. Like I said, I think that might be in the 30% ballpark. Let's see here. Let me read some of your guys' reactions. Video feed a little glitchy. Is that so? Apologies if so. Let's see here. There's no edge in 0 DTE SPX options. The deltas are spot on and the options are perfectly priced. You end up flat over time. Interesting. The only time I bet 0 DTEs is on big moves. It's just a way to, for me, it's just a way to fade them intraday. And it's basically a leveraged directional bet. I don't use them every day. I'm not selling them. I just use them as flyers on big moves. Brett says, oh, wait, I'm right. There's a reveal on June 12th, which is today, and they start driving on June 22nd. Is it going to be driverless, though? Because robotaxi and driverless car is different. I've kind of like, I don't know, some part of me is dead to that whole narrative now, you know? Fool me once, shame on you. Fool me twice, shame on me. Fool me 20 times. Bro, like, do you know how many times that robotaxi carrot has been dangled out in front of the investing public? And I think that, you know, that's the sort of the boy who cried wolf in reverse, because what will happen is when you actually see it, it's probably not going to be discounted to the extent that it should be in Tesla's price. And people may have to play a little bit of catch up, or at least the retail space will. Robotaxi, see here, Grumpy Mike's about to throw down the hammer here with this one. Robotaxi was first announced in 2016 as part of Elon's master plan part 2. Then it was talked up again in 2019, Autonomy Day. I seem to recall it was always going to be available the next year. See, Grumpy Mike is now, Grumpy Mike has just wrapped up the jaded nature of the investing public when it comes to robotaxi from Tesla. Oh, man. I think the plan is to use the Model Y initially, not the little 2-door CRX thing. I think so, too. So it's like a robotaxi with a person sitting in the driver's seat, just not driving. Is that kind of what's happening here? I don't know. That might be a bit of a dud from a marketing perspective. But, you know, fake it till you make it, baby. Fake it until you make it. I don't think I need to refresh my yields here, but bonds, we're back up over 114. So like I said, I think 114 has become this new point of control. So I don't know. Maybe you look at the range as 114 plus or minus 4 points. Maybe 117 is not out of the cards. I don't know why I'm holding out for this low probability outcome. But I doubled down. I don't double down, but I added to that my one. I basically just to know how stupid this bet has been. When bonds flushed to like 109, I didn't do this at 109. I think we're in the ballpark of 110, maybe 110 change. I bought some 117 ZB calls outright. I never do this. I usually sell something against it to help pay for it. I almost never buy outright calls. But I bought the 117s a few cycles out. So this is like the least strategic trade that I think I've done in a few years. Yeah, so I'm just sitting on these things. I added a little bit today, earlier. We'll see what happens. It's most likely going to be a big time loser. It's up a little bit. It's up a little bit as of now. On a percentage basis, it's up a decent amount. And I'm just, if we can get close, who knows what these lottery tickets can do. Every once in a while, a guy's got to buy a scratch off. You know what I'm saying? So that's the bet. And I think there are way more strategic ways I could have played this. I'll be 100% honest. But sometimes I get greedy and I just go for it. The market has to remind me of very simple concepts like theta. And why buying pure extrinsic value is not a great play over time. But it's okay. We all hard-headed. We need to learn those lessons. Who knows? Maybe I get lucky, and then I go, whew, made some money. I'll never do that again. Crude started its little fade here today. I'd say it held in. It looked like it wanted to break. We retraced like almost 50% of yesterday's move before closing somewhere around 30%, 33% retracement in that ballpark. But the fade begins today, which is sort of interesting to me. I wonder, when it comes to the Israel-Iran geopolitical risk thing, I'm not an expert, and I try not to. Twitter's kind of this place where a bunch of people will read a few tweets by experts and then presume to know something, and I think doing that really gets you in trouble. So I try not to do that, and to the extent possible, I'll be honest when I feel I have nothing of value to impart on a room full of people, because I assume you guys are all really smart. I know you guys are. I know there are incredibly brilliant people here with incredibly brilliant professions, and you can spot a phony a mile away. So anyway, my point is, I'm not a geopolitical expert on the tensions, the rising tensions between Israel and Iran. I'm doing my best to try to stay informed, so I don't think it makes sense for me to talk in depth on that particular issue. It's clearly having an impact into risk premium in crude oil. There was some additional strategery that played out between the U.S., Israel, and Iran today, with the U.S. saying they would not participate in any strikes in Iran. But other than that, I had said I liked the idea of selling elevated vol in crude oil up at chicken shit levels, up at 78, 80. For the reason I think anything sustained above 70, 70, I think this could be this is obviously very meaningful events taking place. that have a real risk of escalation. And that escalation is very material for all of us. I don't know. It just certainly seems like the market's not discounting that reality. But there's a part of me that says, man, like, I don't want to see that outcome. And if I don't want to see that outcome, then I, bet the opposite, bro. Bet the de-escalation, bet the fade. So I still like the idea. You're getting not as great of a price as you could today as yesterday. Excuse me. But I'm definitely I prefer small size here. My confidence level is my uncertainty level is very high on this. And I don't usually I don't usually mess around with crude oil, except on outlier moves. So the hedge here, though, is long energy stocks. So I'm long energy stocks, which makes me feel comfortable sometimes playing the fade. It's the same thing with the miners. If I'm long gold miners, for example, then when gold got to 2,500, or 3,500, excuse me, when gold got to 3,500, I don't mind taking a bet on a fade of gold, because really that in a way plays as a hedge against the miners. It's the same thing here. I'm long energy stocks, so as gold gets a bit potentially extended in the short run, I use that as an opportunity to take a small bet against it. And if I'm right, it sort of adds to the performance of the portfolio. If I'm wrong, it takes away from some of the upside from the miners. So I got a little bit of cushion if I'm wrong. And that's why I take these kind of bets. Gold, a really nice day. A really nice day. Stays in its consolidation range. 3,400 on the board. Silver was an okay day as well. I'll take it. I'll take it. It looked ugly at one point, but they rallied them pretty much all the way back. So I'll take it. Like XOM, Chevron, aka XLE, Bright, no. No, I don't think I own Exxon or Chevron. Like, so here's my thing. If I'm going to buy market beta, so let's say I want like NVIDIA, Microsoft, NVIDIA, Microsoft, Meta, Google, Tesla, if I want any part of the Mag 7, most of the time I just buy market beta. I'll just buy the SPY. Because why? Why not at least have a little diversification, then not watch it every day? Because you're buying 30% of your position is going to be those 7 stocks anyway. So buying an ETF when it's the same, when 2 of the stocks are 50%, to me it's this. If I wanted to do that, I would just go buy the ETF. I would go buy XLE. But if I don't want that, that means I'm going to go somewhere away from that 30% altogether. So like days like today, for instance, days like today don't work for me. So if the NASDAQ advances and like materials and energy don't do well, even though the market's up, it's not good for me. I'm going to have drag on my portfolio. If tech is outperforming and everything else is not doing anything, it's not good for me. But like in the last 2 weeks, when even though tech is rising, everything else had so far surpassed it in performance. Like nuclear had so far surpassed that stuff in its outperformance. The miners at one point had so far outpassed that stuff, outperformed it. And so that's really good for me. And so with energy, if I don't want to go to the two boring stocks, and I say boring just because it's beta, if I'm looking for something else, then I go, okay, I'll go look at all the energy stocks, and then I go try to look at all the beta of those stocks. I'm looking for higher beta, and then I'll do some under the hood analysis. So I generally have smaller cap, not small cap, but smaller cap than ExxonMobil and Chevron. Damn, man. And higher beta than both of them. So I think like Devon Energy, Marathon, Apache, there's a handful of them. And so I would be looking for energy to outperform, but I would be looking for high beta energy to outperform. Most of the time, probably mid to large caps outperforming the mega caps. And if that happens, then I get paid off a little bit more than the beta of the market. Because the whole game is to try to outperform the S&P, right? So if I just want the S&P's beta, I'm just going to buy the S&P. Otherwise, I'm going to figure out what I think will work and then try to position myself to outperform if it does. And if I'm wrong, then I pay the price. So anyways, I hope that answers your question. Occidental Petroleum I own as well. I think, but that's not exactly for the same reason. I think that was just like a Warren Buffett Me Too buy. It's like, Uncle Warren's taking a 20% stake in this? Sign me up. I don't know what he knows. Sign me up. I don't know if it's 20%. It was something. There was some big position he took out. But I guess I want to show you, we had this little, I don't have any, I have more questions and answers after yesterday's discussion around home builders. So I thought I'd come back and just share something that I'm working on. Hopefully you guys can all see this. So I started going through the home builders in pretty deep depth. I'm not really ready to, I think, have a meaningful, actionable conversation. But I shared some of this on Twitter, and I'll do the same thing with this stream. I've sort of broken out the home builders between those with double-digit valuations on a forward basis, next 12-month basis, which is a handful. D.R. Horton, Lennar, Sky Homes Champions, Tri-Point Homes, and then all those with single-digit next 12-month PEs. And I started to go through, there's a bunch of stuff on here, but their gross profit margin, total debt to capital, their buyback yield, and then the individual stuff that I thought would be relevant to go through and try to see if I could give myself a better understanding of this world. So the most important one I thought to start with, just to get my bearings on a lot of these home builders, was the ASP, so the average selling price, to try to understand sort of what price point all these home builders are in. And I know there's usually a range on these things, and that's why it's average selling price. But to give an example, right, Toll Brothers, their average selling price is $900,000. So they're building $1 million homes. That's a very different customer than like Legacy, I think. Legacy, their price points are right around $180,000, Legacy homes. So I thought this was important to try to understand which customer these guys were building towards. And the interesting thing, obviously, is Toll Brothers at $1 million price point has very low cancellation rates. But something, let's say, towards the average, KB Homes, for example, at $500,000 has a bit higher cancellation rates. And there's a bit of correlation to that if you were to look at the data. I looked at their order backlog as well. I'm slowly marching my way through a bunch of data here. And I did buy a little Lennar here. I didn't do an option play on it. I just bought a little stock. I think I might be early, but a lot of these stocks over the last 2 weeks, they do look like they're getting a little bit of support. And so Victor, why are you going through all of them? Why don't you just pick the most liquid? One, none of these are wildly liquid. So DHI is the most liquid, and you could drive a truck through their options market. So I'm just saying that first and foremost. So for all of you option junkies, a lot of what I'm going to end up doing is going to be wasted on you guys because there's not a direct option play on this stuff that you're going to be able to utilize where you're not going to be in a Hotel California situation. So really the at the money's here. You're talking about 30-cent spread on the at the money calls 36 days out. So you get the picture. This is the most liquid of the bunch. So it only gets worse from there on. I'll look at Lennar so you can see. We'll go 36 days out. You can see there's a dollar wide spread. So do you play earnings? That's probably going to be a no for me. And it's only because it's like I'm not going to do an options play on earnings, and it's because I'm not going to give up that much edge to try to get something executed both before and after the earnings play. So unfortunately, that's kind of that's all I have so far. But what I did do is buy a little bit of stock in like 3 of these home builders so far. Why did I do that? Because one, the valuations are fairly low. You know, some of these things, I mean, they have a PE of like 6.5, 7, 8. And last time they were at these valuations at 6, 5, and 6, this was like 2022 when rates got jacked up to 5.25. All these things got murdered first, and there was no reason to believe that the home builders would be good buys. No reason at all at that moment in time. But you were getting a really good risk to reward based on its valuation alone. And so I closed my eyes and I bought a handful of these. They went on a 2-year run. And what I didn't see, I wish I was smart enough to see it, but what happened was everyone got locked in their existing homes. So nobody put the existing homes up for sale for like 2 years. So the only real new inventory were new homes. And the market saw that way before I did, and they rallied them. And so I think some of these things, not all of them, are at interesting and attractive valuations. But I think just looking at them, one of the things I have here is the PE ratio 5-year rank. So not only can you see, okay, this is the Pulte Homes has a 9.2 PE, forward PE. Well, that's it's a 80 rank over the last 5 years. Over the last 20 years, it's in the 40s. So 20 years by 20-year historical standard, it's on the cheap side. Over the last 5 years, it's not that cheap. So I'm trying to use the similar concepts to IVR rank, but I'm applying them to other places, like, you know, PE, for example, and there's some other things I'm doing that with as well. There are a handful of these that I thought, all right, I'm going to take a small stab. And why am I taking a small stab? Not only outside of valuations, but it's also because I am sort of a little bit long bonds here, structurally long bonds. And so I think this very interesting thing could happen, which is just at the time when all of the news around home, because everything you are now starting to see is bad, right? It's negative. It is that, oh my God, there's 30% more supply. And you're now, it's starting to get peppered on everybody. You're starting to see some prices actually cool off, especially in some of the hot markets, but like overall. But the point is, most of these stocks are already down 40% off their highs. So these are the percent below their all-time highs. These are all down 30, 40, 60, 90% off their highs. So the question I asked myself is, yeah, I get that the news is now finally going to get bad. But you and I were talking about how shit the housing market was going to be, how effed the housing market was as soon as if the Fed started to cut rates. They did cut rates. We talked about how the housing stocks had not priced that in. Then all these things for 3 or 4 months priced in horrible forward-looking scenario. And bonds are now at 109. Borrowing costs, the 30-year mortgage is at like 7% right now. Could it get worse? Yes, it could get worse. It definitely could get worse. But if the economy actually slows meaningfully right now, one of two things has to happen. Either bonds have to just blow up and yields have to scream higher, in which case this trade's not going to work. That's very possible, but we're kind of effed on everything if that happens. I think all risk is effed. Could be effed momentarily. That's a liquidity problem. So if that doesn't happen, and we kind of saw it today, right? We saw it this morning. Equities were down about 1%. Russell getting creamed. I want to say equities were down about 0.5%. The Russell was down 1%. Bonds are rallying. Gold was rallying. There was a little bit of traditional risk-off sentiment very early this morning. And if that world returns, at the same time, people are starting to freak out about what the market has already known about housing for the last 9 months, man. Some part of me believes, is there additional pain here? I think there could be, but I'm getting pretty decent risk and reward. I probably got a decent cushion buying these things off 40%. I'm probably too early, and I'm probably talking myself into a horrible trade. But anyways, I'm not fully done, and I did not commit a ton of capital. I mean, we're talking like less than $10,000 so far. So this is not a big position yet. But I just put some chips on the table on a few of these, and I'm gonna keep doing a deeper dive and hopefully have a more meaningful conversation with this group of people that's more actionable. But I thought I'd talk you through what I'm doing and how I do it in the background. Brian says, I'm falling prey to the 8 minutes of research and buying. Bro, that's said like a true retailer. That's how we get down. All right, let's see what you guys are saying. 180K, does that include the dirt? Or are you paying space rent? So Grumpy Mike, a lot of this, which I will also add when I'm done, and I'll put something out like really simple and readable on Twitter or something. A lot of these have to do with what part of the country these people serve. So each one of these home builders is not building across, like in New York and California and Florida and Austin, Texas. So, if you're building stuff in like Omaha, Nebraska, it's going to have a very different cost profile. And then also, some of these don't build straight homes. Like, let me give you an example. Some of these builders, so you can tell in the ASP. So the average selling price, you'll notice there's two outliers to all these, and those outliers are SKY and CVCO at less than 100,000. What type of homes do you think those guys build? It's partly it's manufactured homes and trailers. And the wild thing about that is if you kind of think through the theme that we've been talking through here, which is decreased living standards for people. This is how sick the market is, and this is how I know that I'm very cynical, but I'm not wrong. Because when you look at all of this, the themes of decreased living standards, they all perform. This is CVCO, which is, I don't know how to pronounce it. I think it's Cavco Industries. So this is selling manufactured homes and trailers at a 96,000 price point. That's the average selling price. Some less, some more. This thing went gangbusters, bro, and it didn't break until the last 4 weeks. So even though a lot of the housing market broke back in September, the traditional housing market, this thing did not break in September, and has been on an absolute sick run. And that's how I know I'm cynical, but I'm not wrong. And the market saw decreasing living standards. It sees people falling out of the middle class. It sees people making trade downs in living standards. And that's how you get some of these companies outperforming. What I also found was interesting, and I'm not done with this. You remember I keep talking about, I wish I could trade like Boxable, which is still a private company, stuff like that, like those prefabbed homes that are ready to ship. These two companies kind of do some of that. So I've got to dig deeper into it because the themes that I've wanted to put money into, I might be able to get some either direct or indirect exposure through Sky and CVCO. Anyways, I just want to come back. I'm balls deep in these home builders ever since yesterday's show, and I figured I'd come back and show you what little I've done so far, and we'll keep that conversation going. Again, might be too early. If bonds want to go to 6%, I think we're probably early. But if not, and you can tell it in the overall, what else I looked at is, these home builder ETFs, they tell there's home builders and then there's building supply companies, and they have very different risk profiles. So when they're mixed together in XHB, it's an okay proxy of what home builders are doing. It's an okay proxy, but there's some second and third derivatives mixed in there. So anyways, I don't know why I've decided to get this thing to go down the rabbit hole on home builders, but I do this all the time. Like one time I went down the rabbit hole on blood donations. So like a friend of mine just donated plasma a couple years ago. It was right after sort of we expanded the money supply 27%. And a friend of mine sort of casually mentioned that they donated plasma recently. And then I asked a couple of questions like, how often can you do that? And how often do you do that? And do you know people how many people do you know who do this? And then I went down the rabbit hole for weeks, just researching plasma and blood donations in America and how that relates to the world. I think there's only 3 countries in the world where you can get paid to donate plasma. Maybe 2. Now I can't remember. It's been so long, but it's only 2 or 3 countries where you're incentivized to do it. And it was some staggering numbers, like 80% of the world's plasma comes from American donations. And then, so I wanted to know, of course, I'm like, all right, if you could donate, I think it was twice per week. I'm like, that seems like a lot. And I was like, what are the known health issues with this? Coincidentally, the only people who have paid for any studies in the field have some conflicted interests. And those studies found no health issues. But I think there's only one or two studies. You do enough research and you find just how poorly people think the studies were constructed. And then other than that, you get the line, there is no evidence, there's no scientific evidence that shows that routine plasma donations are harmful to your health. And I'm like, you know what's funny? Whenever I go down the rabbit hole far enough and I see that line, I know it's bullshit. I know that's only evidence. I would say always, it's mostly bullshit. It's evidence of a sort of corrupted academic scientific system. That in order to do the research, you have to get funded. In order to get funded by a corporation, there needs to be a profit motive to fund that research. And if there's not a profit motive, it means you got to get funded by the government. But if the government is captured, they're not going to give you money to do your studies either, unless it's going to have a certain outcome. So the more I go down the rabbit hole and I find the phrase, there is no scientific evidence to say yada, 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 I'm instantly skeptical, put it that way. And this has been your your tinfoil hat moment, brought to you by Reynolds Wrap. Yeah, don't let me talk you into a bunch of like home builder plays, by the way, okay? All I'm doing is I'm gathering the data. That's all. Catan saying BLDR, Builder's First Source, is Big Buffett Holding. Yeah, I think another one's like IBP. There's a bunch of big builders out there. And so I might, after I get done with the home builders themselves, I might go to the supply companies and go down that rabbit hole too. Lone says, of course, as always, Vic, follow the money, always. Catan says, we just spoke about this, Victor. Vampires pay well. Yeah, man. Like, I'm not knocking it. You would be blown away by the percentage of Americans that are doing this. It's a second income for like 30% of America. A third of U.S. households. It's somewhere in that ballpark. I did the research a while ago. You'd be blown away. It's so common, nobody talks about it. Nobody talks about it. And it's a really big deal. And the reason why such a big percentage of the plasma comes from here is because we have the most deregulated donation laws. So the world is effectively harvesting Americans' plasma and blood. And it's not, so here's the thing, people that have ever received a blood transfusion or a plasma donation, because I've said this in public before, they'll come at me as if I'm not knocking it, and I know that it is life-saving. I do know that. Yeah, I'm not knocking it at all. But I'm just saying, I think we owe it to people if we are going to allow people to donate so often to create a secondary income for themselves. We should owe it to them to know whether or not it has any short-term or long-term health consequences so that they can participate with informed consent. That's my only point. That's my only point to this whole thing. And and then if we knew that, maybe there was a more appropriate limit, and maybe there's not, maybe there is no health consequences, but maybe there's a more appropriate limit that then allows the continuation of the donation, a little bit less income, but better health outcomes for the donator. That's what I advocate. That's what I'm advocating. That's all. Just informed consent, man. That's all I want. A world full of informed participants, and whatever you're an adult after that. Whatever you choose is whatever you choose. I always want to head that off real quick because I'm likely going to get some emails or comments. Nothing doing on Bitcoin. 106, just boring. I hate these periods of consolidation, you know? It's like, just go to 130 already, you know? Go to 130, make people regret it, then go to 150, and then let's get this exit liquidity dump over with. And maybe that's not even enough. The only thing I keep asking myself, though, is how could we have a world where housing prices would be going down, but other real assets would be going up? You know what I mean? That's such a crazy world to try to imagine. And even to try to give it a realistic probability of occurring. Even though at some level it kind of is already. The idea that real estate values can be going down, the ultimate sort of scarce real asset, those things can be going down while gold and Bitcoin can be going up. I don't know. Is that sustainable? How long can that be sustained? That seems to make no sense and defy all logic and all financial history. Right? I don't know. Emmett Morrison says Elon is boosting his income, donating his DNA. The degenerate trader says, Victor, buying home builders is such a degenerate trade. I love it. That's the only kind I do over here, degenerate trader. If you haven't noticed, that's the only kind we do over here. We do the thing that consensus says is the dumb idea. And you should, don't you know, bonds rally in a recession? Don't you know that the yield curve is going to come down when the Federal Reserve cuts interest rates? Don't you know tariffs are going to jack up inflation? Don't you know? And don't you know that there's more supply than demand in the housing market right now? Because it just started to show up in the public's newsfeed, even though this was a story 9 months ago. 9 months ago, and the market is discounted at 40%. Don't you know? Yeah, I do know, man. It's in the price. If it gets worse than anticipated over 9 months, then I got a problem. But I also have 40% cushion. You're buying NVIDIA at highs. Which one of us, you know, if the S hits the fan, which one of us is going to be in a little bit better risk position? I still haven't figured out what the hell happened yesterday, though. I still have not figured out why home builders puked 2% yesterday. And that's really bugging me. Insurance prices people out of the market. It's not just insurance, Grumpy Mike. And this is why, I'll say this before we get out of here. This is why I had a real hard time trying to figure out, I had a property in Chicago, and I had a real hard time trying to figure out what to do with it. Because it was my first real estate purchase. And so I didn't know much at the time. I had Dunning-Kruger effect. I thought because I'm a trader, then I know how to navigate this market, and I didn't know. Real estate is so different than trading, and I'm sure anyone that's in real estate, they come into trading, they go, this is so different than real estate. So I had Dunning-Kruger effect. I bought a home that was much older. So my idea was, okay, this is going to be a quasi-starter home. It's more expensive than I think your typical starter home, but like we were living well within our means to buy this home. and we would buy it, and then we'd stay there for a few years. We figure out, because my wife's Singaporean and I kind of wanted to move out of the city, and you guys know me. I want to move out of the city. I want a bunch of land. I don't want neighbors. I don't want noise. I don't want light pollution. I want to see the stars at night. I want to smell cow manure from time to time. I want to have to go into town to get to buy groceries. You know what I mean? I want like when my son's like 9 years old, he's riding around the neighborhood in the country with on a moped, and there's no chance of him seeing a police officer. If he does see a police officer, he knows his father. He's not going to get in trouble for doing it. I want that type of life. And needless to say, my wife being from Singapore, we wanted totally different things. But we're having a second kid, so we got to buy a place. So let's buy this place, and it'll give us time to figure out what we want to do longer term, and then I'll rent this place out. That was the idea. But I should have thought through, the house was very old. I would have had to put a lot of money into the house in order just to feel comfortable moving to another country and sort of maintaining that property. And I didn't think through a lot of those things. Plus, Chicago, it's like a bomb went off in Chicago. I'm not going to talk about any specifics because it's sensitive time right now, but a bomb went off in Chicago. Crime, property crime went crazy. Education changed, services got stretched. It's just, everything changed. I'm trying to figure out what to do with this thing, and I'm going back and forth. I know if I hold long enough, this is appreciating, cash flowing asset. So I shouldn't really be nervous. But there's a part of me that just goes, I know what I paid for this house, because I paid it after prices moved. So I didn't get it at the top. Luckily, some of that appreciation I got, but the property was almost double what it was just maybe a year and a half or 2 years before. And I felt a way about that. And so they say real estate is all about location, And there was a part of me that goes, even though I know that this is a cash flowing asset, I still don't feel comfortable holding on to this thing. I still would rather put the equity somewhere else, even if it was real estate somewhere else. It's just, the market dynamics don't make sense to me. The prices on all these things, they don't make any sense to me. And if home insurance goes up, which it was, and if property taxes go up, which they were, it's like all of this home affordability